Hey, welcome guys. Good evening wherever you are listening from. My name is Kalu Aja. This is a money space. Let's put it simply, money space, right? Short notice, I get it. But it's a slow evening, so I said let's just meet and talk. Very simple about personal finance, your investments, the economy. If you have questions, you can ask. I will try to the best of my ability and according to regulation to sort of give you, should we say, educational guidance because I can't give advice, right? But we can talk around questions that you have about the economy, maybe your own personal finance, So let's maybe have an hour, do it, and we'll get through it. So it's an open session. If you have a question, request for the mic, and I will give that to you. My DM is also open. So if you request, I will see it, or send me a message. I will see it as well. And I will be able to answer, as it were. So I got a first question on DM. Do you do trainings on investments? No. Personally, I don't do it because I can't train individually. So this is what I do. Twitter Spaces, stuff I write on articles and all that. That's what I do. And I'm able to answer your questions on that. So if you ask, yes, I will be able to take your questions on the space. Thank you, Timmy. Let me see. This came yesterday, but it's a rather good question. Bitcoin has been approved. Do you think it's a good investment? Well, for Bitcoin and for cryptocurrencies as a whole, let's just maybe stick to Bitcoin because that's the only river I'll swim in now, Bitcoin. I would say this, it's been approved as an ETF, which means that the large institutions can buy them now. The Fidelities, the Van X, those large ETF and those fund managers can buy them. That gives it credibility. It doesn't change the utility of it. It gives it credibility that you can go to an American institution or online and buy Bitcoin legally. Like I just did a test where it came out and I was able to buy Bitcoin legally on my app. You couldn't do that in the past before. This is through the banking app. I was able to do that. So it gives it legality, and it also allows you to sell and buy it via your app or via the bank account. So does it give it more volume? We will see. That it's too early to say, but we will see what will happen. OIK, how you doing?
Hey, I'm doing wonderful. And you? How are you doing?
I'm doing very well, chilling. It's a slow day. What can I say?
Yes. It is here in the US. We have MLK Day, and it's a good time to chillax.
Exactly.
Oh, yeah. Okay. Hi, everybody. I'm happy to be on your space. I often join from time to time, and I really want to commend you because what you're doing is so impactful. Right?
Thank you.
Even us in the US, even United States citizens, some of them still don't have a clue what they're doing with their IRA and all that. We just leave it, to the job or to the manager to allocate funds, right? But I'm beginning to understand, I've been trying to figure it out myself. I've bought summary of stuff, just to learn finance, investment, even in Nigeria, trading.
Yeah.
I started off with trading some months ago. Some guys on Twitter. I'm like, I want to learn more, Nigerian guys, right? So what you're doing is so great. I got your book already.
Oh,
I got
nice.
it the other day from Amazon. Good. I did respond to one of your tweets, or two of your tweets, asking, each time you're peddling the book, which is a good thing. It's a nice book. The publisher, they did a great job. I've not had the chance to really look into it fully, but I must say it's pricey. It's pricey. I mean, I'm not saying you should reduce the price, but I actually wanted to buy like 5.
Yeah.
Give to people, we need to educate ourselves, especially us Nigerians, about investment funds and all this kind of stuff, right?
Yeah.
But I I just checked now. I have a copy. I'm trying to run out, but I just saw you open the space and I said, I have to ask my question. I realized you don't have it like an index. Not for this book, maybe for subsequent books. It's nice to have an index so that, like I wanted to check Bitcoin, if you did anything on Bitcoin.
Gotcha.
Because it's something I want to, just an introduction,
Good call.
So
Good
can
call.
you give me an introduction on Bitcoin, if you don't mind, a basic dummy introduction to Bitcoin?
And I'm the best guy to give it because I'm also a basic learner. I'm not a tech guy. But what it's all about is this, right? Think about the internet. In say 20 years ago, the internet 20 years ago, how could you pay for things online? Before you had your cards, before you had the digital, just think about 20 years ago on the internet. If you guys said we're going to create money, but this money is going to be digital, which means we can pay for goods and services online. That's the whole idea, right? The whole concept of it. But they then say we don't want our money to be like the fiat, the money, the dollar that you hold, because the dollar that you hold can be printed at will by the federal government. We want ours to be a fixed amount. We can only print a fixed amount. The idea is to cancel inflation. So because if you can't print as you like, then of course you give the currency a de facto value because it cannot be printed into inflation. That's the whole concept of Bitcoin. It's digital and it cannot be printed in excess. But if you fast forward to today, the idea of the digital currency has been overtaken by many things. Now you can pay with your phone. You can convert
right? That's what I do these days.
Correct. But Bitcoin has still stayed because Bitcoin, I think their wisdom was to say they capped the supply. And when they capped the supply, that means that the price cannot go more than a set. It can't fall because they cannot print in excess.
I'm sorry.
The digital. The crypto itself, the Bitcoin itself is a product. It's a let's call it a...
Okay, like the exchange rate.
No,
the dollar.
The Bitcoin itself. The Bitcoin itself, the actual thing you're buying, it's like, call it digital dollar. Just pretend Bitcoin is your dollar, but digital form. So that currency, call it B. You call it dollar, you call it B. Just say the currency B cannot fall below a certain number because they've capped the supply, so it can't be printed. It's like saying when they make designer clothes, designer shoes, why are they expensive? Because the supply is very limited.
Yeah, they do just a few.
It's just a few. Same way with cars. You see limited edition Ferrari. The price is capped, so it keeps the price high because only a few be created. So same with Bitcoin, they kept the number that they would print, very few, 21 million or 21 billion or whatever. They can't print more than that, right? So that means that the price itself, by just demographic growth, will keep on growing. That was the cool thing they did with Bitcoin. So it's just digital dollar. What is it used for? Not a lot, honestly. Not a lot, honestly.
Exactly.
People that buy it are the same. It's like buying art. Why would you buy art?
Right.
Because you buy art because tomorrow you could sell art. It's a unique piece of art. So the value of that art does not correlate with the rise and fall of the economy. A Mona Lisa will not go down in price because it's recession. And an papaya will not go down in price. So when you buy something that is scarce, like Bitcoin or gold or diamond rings that are scarce, what you are doing is that you are diversifying your portfolio to say this particular asset does not rise and fall with the rise and fall of the economy. That's the whole idea. That Bitcoin followers believe that because the supply of that digital dollar called the B is limited, then the price of that digital dollar will not rise and fall, just like the dollar rises and falls. So it's a scarcity asset in that it doesn't do anything. If you get Bitcoin today, you don't do quote unquote, you can't eat it, you can't farm it, you can pay with your goods and services with other things apart from Bitcoin. But because that asset rises in value, it's like art as well. It's like buying fine wine. You don't have to drink the wine when you buy it. Just the wine itself goes up in price because it's only limited from the chateau that made it hundreds of years ago. That's the whole economics of the Bitcoin. The IT side, just forget about that side. Just forget about the IT side. It's the economic side that we're talking about, to say, because it's scarce, that's why they had the ETFs then buying it to allow. So it's like a way for you to hedge your dollar by buying something else.
What ETFs? I'm sorry.
They're called, in Nigeria we call them unit trusts or mutual funds. An ETF, an exchange.
ETFs. Oh, yeah. Okay, right. ETF.
Exchange traded fund. Yes. Okay. So they're just like mutual funds that manage funds.
I know what that is.
Correct.
I got a schooling from you guys, from you, your last space.
Gotcha. Yeah. So that's why you buy it. Really, you buy Bitcoin because you'd like to have an asset that is not correlated with your other assets. It's not because you're going to do anything with it. That was the whole issue of Bitcoin. It has no utility. There was a report by Bloomberg, I think it was 2 years ago, that says only 4% of Bitcoin is used to actually trade. So people just buy it and hold, then exchange it for a higher price. But they don't use it. It's not like Ethereum it has a utility function. It's an asset that has become expensive because it's scarce.
Okay.
That's the whole thinking. Yeah.
Thank you. That gives a background.
For your 401k, go ahead. Yeah, go for it.
Please, to listeners. So the guy, Banky Fried, what exactly did he do? Maybe if you talk about what he did, his criminality regarding what he did with Bitcoin and all that, may make me understand further.
He didn't really do anything with Bitcoin. What he did was that he had a Bitcoin exchange that a lot of investors put money in. But what he then did was he took the money from that exchange and gave it to another company that he owned. And that company was then trading on the stock market. So it wasn't the Bitcoin itself that killed him. It was he took the money. The Bitcoin part was doing very well. He took the cash from the Bitcoin part, i.e. the crypto trading arm, and he gave it to his own private trading company, and they were trying to trade and make money and all that. That's what they did wrong. Not the Bitcoin per se, but they took about 5 billion out and tried to trade and make money on it. Yeah, it's like if I give you money in a bank, and then you take the money out. That's what a bank does. They're allowed to do that. They're allowed to do that. But if I give you money to buy a piece of land for me, and you take that land and you go trade and go gamble, that's what he did. He took the money that I gave him to buy land to go gamble, and of course the gambling then crashed and he couldn't pay back his guys that he owed. So the whole FTX thing sort of imploded.
Okay, great. But prior to that, he did make a lot of money off of it.
Yes, that's nothing. He was making good money. It was legal. Yeah. It was fantastic. There's nothing wrong with that. Yeah, it's not the FTX that was a fraud. It was the taking of the cash out of FTX to go trade outside. That's where the problem came from. Yeah. Okay. Quick one for you. Right? For your pension.
Everybody for allowing me to ask. Yes, sir.
For your pension, quick one. So you want to do, I don't know how old you are. I'm not going to ask you online how old you are, but you sound young, right? So you want to...
No, I'm not young.
Okay.
But I'm pretty young at heart.
Got you. So I'm not sure how...
Lady.
Got you.
Pretty good.
Good. Send me a DM, but I'm not sure how much you earn, but look, Roth, ROTH.
I have Roth.
Yeah, do that first.
I'm traditional. I have both.
Yeah, do the Roth, max that guy out before you do traditional. So do your number one, your contribution, max that out with your company, then do your Roth, then you do your traditional before you even invest. Just free tip here, yeah?
Excellent. That's what they all say. But I didn't come to America, until recently, right?
Gotcha.
That's what we're all striving to do, right?
Excellent.
We have a good nest egg.
Yeah, gotcha.
To retirement, but I think I still have many years to work.
Yep.
I'm trying to start maxing. Every year I increase my deduction.
Excellent,
so
excellent. Good to hear.
That. Thank you so much.
You're welcome.
You have a lot of information, good information.
And tell me about the book. What else you like about the book? So I have index written down. Someone's told me that already. We'll put that in. But
yeah, I'm going to do a review.
Gotcha.
I responded to two of your tweets. And I'm going to do a review. Don't worry.
Appreciate that. Thank you so much. Yeah.
And I'll buy more copies too.
Amen. Let me give you a hack. Buy in Nigeria. Nigeria is still fixed at 18,000 naira. America, Amazon.
Okay,
So
okay.
if you take dollar and you buy it in Nigeria, you can give to more people. That's the hack.
But
That's
the people I want to give are in America. Because
Eh,
in America, we don't
yeah,
we're not saving enough.
yeah. Buy it.
People save, but not enough. They need because they don't understand, or you don't even know how to allocate.
Okay, I can buy you in America, right? DM me. I'll buy for you with Otto's discount, and I'll send it to you. I'll buy it for you with all my account in Amazon, and I'll send it to you. Yeah, that works.
No problem. I need like 5. We'll talk.
We'll talk. Yeah. All right. Cool. All right. I got Victory.
Okay.
Thank you so much,
Thank you, sir.
You're welcome.
Thank you so much.
All right.
Bye,
Hey,
man.
Victory Lawal. Go ahead, sir. Thanks for holding on for me. What's up? Victory, you've got the floor. Let me go back to DMs while Victory is still on. Yeah, Carlo, I'm not really sure. I don't understand what you're saying. Are you saying that Bitcoin has no utility? No, I'm saying that the utility of Bitcoin is the scarcity. Victor, just yeah, Victor, I can hear you. I'm saying that.
Yeah, so I'm kind of having a brunch now. So can you give me some minutes? I'll join you guys.
Only big men do brunch. Okay, no problem. Go ahead. Yeah. So again, I was just saying, just responding to the guy on DM. No, I'm saying that Bitcoin has other uses, right? But the attractiveness of digital currencies, of Bitcoin particularly, one thing that attracts people to it is because of the scarcity value. It's capped. In the amount of Bitcoin that can ever be issued is capped. So any asset that you cap, you automatically create a quote-unquote artificial scarcity. And the idea being that if you create that scarcity, it should translate to the price. It's not automatic. You can't say because something is scarce, then the price will go up. It could go up temporarily. You need more things to keep the price up. So ultimately, what needs to happen is that the utility of any asset has got to be established for the price to keep on going up and up and up. So for now, that you have the ETFs buying Bitcoin, what will happen, I think, is that they will buy for the folks that know about Bitcoin. So the folks that know about this asset will place their orders and buy. Okay, then what next? There has to be something that will happen next. Unless the US dollar crashes, then you then say, oh, we're going to hide our money in Bitcoin. Or you create a way to do remittances via Bitcoin. So imagine if, for instance, the African countries then say they want to allow remittances using cryptocurrency, which means I can buy cryptocurrency in Houston and then, of course, send it to someone's wallet in Nigeria, and they can get that money without paying bank fees, faster, and of course, more efficient. And when you create that sort of utility, then of course the price of Bitcoin will start to go up because Africans will then buy it to transfer money home instead of using dollars to transfer money home. When you do things like that, you create a utility around that. That's where I'm going to. Victory, are you done with your brunch?
Yeah. Can I get to know what I'm trying to talk about here?
I don't know what you're trying to talk about, Victory. So come back to us after your brunch, yeah? All right. So that's essentially it. So let's go back to another. Go back to my DMs. Very interested. Yeah, Kalu, I was at your space. Okay. I was at your space last week, and you had a sample portfolio. Okay. So he's asking about gold. Right, he's talking about gold. That I'm interested in buying gold. Where can I buy gold in Nigeria, and how? Should I buy the what's it called? Okay. So yeah, last 2 weeks, I think it was 2 weeks ago, we had the gentleman from Afri Invest, Ebo. That's his name, Ebo, and he gave us a sample portfolio on how a Nigerian should invest to avoid inflation. And that portfolio was about 40% fixed income Nigeria. He had about 20% fixed income US. And that portfolio also had 20% equities US. Then he had gold and he had Bitcoin, about 5% or so. So he's talking about how can you buy that gold, the gold part of that ETF. Yes, there are many ways you can buy gold. The easiest way for you, because you don't have storage, you don't have all that, is just to buy a gold ETF. Just to buy a gold ETF. You buy a gold ETF in Nigeria, there used to be one called the new gold ETF. Let me just warn you, that particular ETF is very expensive. It's more expensive than gold. Why? Because Nigerians found out that if you buy that ETF in Nigeria, you can sell it in South Africa and get currency. So that was their way of taking currency or taking funds out of Nigeria. So that ETF, it's very, very, very expensive. So if you're buying that, just keep in mind it's already more or less, it's hyped up in price, more or less. So what other ways can you buy gold? I prefer the ETF route, right? And I think one of the best ETF that you can buy for gold, I'll just give you a 1 year return, BGLD. That's the ticker, BGLD. That's a gold ETF that then buys gold, right? Or if you want to remember, AAAU. That's the Goldman Sachs Physical Gold ETF, AAAU. So there are many of them. Just go online, just plug in gold ETFs. What it gives you is exposure to gold. But remember, many of these funds are all different. Some buy the physical gold. Some buy paper that shows they own physical gold. If you want to be a purist, you want to see and you want to try to get the ETF that actually owns the physical gold somewhere. And of course, you're buying a certificate that says you own a share of that company. Maybe that's what you want to do. But be very careful when you buy that you read the prospectus and ask, where is the ultimate asset being held? Am I actually owning gold, or do I simply own an asset that says they own gold? Okay, so I have a long question here. Let me read it all out and I'll try to answer it, right? Hi, I am looking at subscribing for a life insurance, especially for the sake of tax rebate. With a 15-year-old plan, my sum assured and bonus will yield 58% interest in 15 years. I'm scared of Nigerian factor with insurance companies. What's your take and what other benefits can I enjoy? So great question on insurance. So he's talking first of all on the tax rebate for insurance. He's perfectly correct, right? If you buy insurance in Nigeria, you don't pay tax on that amount that you pay insurance on. So if I buy insurance for $1 million, I can say I can net that off my taxes. Let me look for the exact words so I don't use the wrong words. Insurance is not part of your estate, right? So if you have insurance, the sum assured goes to your beneficiary. It's not part of your estate. And then the contributions you make, you can net out. That's for insurance in Nigeria. So if you then do that, you then get a tax rebate. That's the first point he's making. He's saying he has a 15-year plan to invest that would yield him 58% interest. I'm not sure how you've calculated that interest, Kay. If you can send me that paperwork, I can take a look at it. 58% to me looks very, very high. If you look at the 15-year bond in Nigeria, I'm going to pull that up, FGN bonds, and we're going to look at the 15-year bond, 15 years. Let's look at the rates or the earnings that we would make from a 5-year, 7-year, and 10-year bond. Let's compare it to 58%. I already know it's not up to what you are saying. So let's look at Euro bonds, for instance. Euro bonds, which are in dollar terms, it's not going to give us 58% in 15 years. The Euro bond that is going to mature in, let's pick one here, in 2032. So what year are we now? We're in 2024. So 1 year Euro bond, the yield today is about 8. The Euro bond maturing in 2027 is about 9%. Matter of fact, the highest Euro bond rate is going to be the Euro bond maturing in 2049, and that's below 10%, and that's in dollar. That's below 10%, and that's in dollar. So when you say 58%, maybe this is Naira, and even at that, I doubt you can get that high rate, 58%. Perhaps you're compounding a bit too much, right? So if you send that to me, I can take a look at it for you. If you want to buy an insurance company, there are lots. Okay, he has sent it to me. Total premium I will pay is 34 million. The insurance will pay first payments 6, 25. Okay, So if they are paying you, that's like 50% interest. Let me do my calculation. So you are going to pay 34 million and the insurance company is going to pay you 52 million. You want to calculate the yield, not the, I see you doing return. You want to calculate the yield, and your yield is going to be what you give the insurance company, which is 34 million, divided by what they give you back, which is 52 million, right? So let's do it together. So if I did 32 divided by 52, let's just do 32 divided by 52. I'm getting about 61%, right? Times 100. About 61%. That's what you are saying you're going to get from them. It's not 58% now. Because remember, you're going to pay every year. When the insurance company pays you every year, when they pay your first payment, you have to reinvest that money. And the interest rate at that time might be lower or higher. So what you want to do is you have to look for what's called a discounted cash flow. You have to put this first payment, this second payment, and you have to take it back to today. So you take this money that's going to get into the future and you convert it back to today. So you do a discount of your future earnings back to today. Then you want to compare this 52 million to 34 million today. So you don't do what you're paying in 15 years. You want to do all what you are going to get. This entire 52 million is going to be paid to you over a period of time, over 15 years. You want to assume an interest rate and walk back to today and get the value of 52 million today. Then you compare it with the total cash outlay you would have done. The higher the difference, that tells you if you should do it. The exact calculation is called a discounted cash flow. So you are doing present value of a future sum. Okay, are you listening? Present value of a future sum. You want to plug in this 6 million, and the final payment, and you want to bring it back to today. They are giving you a bonus of 50 million. That means that's the interest they want to pay you. Perhaps that's their invested principal over the years. When you bring it back to today, that's you to then compare to the interest rate of the same principal today. That tells you if this is a good investment or not. If interest rates go up, it changes your final figure. If interest rates go down, you make more money. If interest rates go up, you lose money. So that's what you want to do with this. You want to do a present value. You want to discount the cash flows back to today. Okay, I can look at this in detail for you after the space, right? I can send you some details after the space where you take a look at, and we can do this together, right? Great. Also, so let me, on that DM, Kalu, I would like to save for a child. I like to buy shares for my child. Is this a good idea? Well, I don't know how old your child is, right? But I would say this. If you plotted a graph over, say, 20 years, or let's just even go to the whole hog. If you plotted a graph since the US stock market started, right? The market has shown an upward trend, which means that it goes down, it goes up, it goes down, it goes up, but it's up today, right? If you looked at 15 years, a 15-year track record, right, of which asset class in the world has performed the best over 15 years. So we're looking at maybe Japanese equities, Japanese property, European commodities, Nigerian bonds, all asset classes. I would try to say which asset class has performed the best across the world in, say, 10 or 15 years, even 5 years. You will find that US equities have either come first or second in either 5 years, 10 years, or 15 years. So you'd find US equities, you would find US property either at first or second. When we say US equity, we're talking about the market itself. So if you're buying the S&P 500, the total market, or you are buying, for instance, the Dow, right? Or you are buying in terms of the property, you are buying the ETF that tracks and invests in property in the US, say the VNQ, things like that. They either come first or second. So that tells me that if I want to invest for a long period of time, I'm looking to be exposed to equities and perhaps property. and especially in the United States of America. Because over time, they have shown that they have given us a return of about 6 to 9%, which has beaten dollar investments. Now, does past performance guarantee future performance? No. Because it delivered in the past doesn't mean it deliver in the future. But we can look at past as prologue and say over time, we've got bonds doing better than stocks, we've got stocks doing better than bonds. But over time, the average return of the US market from inception to date has been 6 to 9% inflation hedged. So if I want to put money away for a child that will not touch those funds till maybe he's 18 or so, maybe I want to do a college fund, I want to build a portfolio that would include US properties and US equities. I want to do that, right? And there are many ways, if you live in Nigeria now, to invest in that asset class. In the past, you could not, but now if you live in Nigeria, there are many apps now that are now approved by the SEC in Nigeria that allow you to invest in US markets. For instance, Cowrywise, for instance, Bamboo, for instance, what's the name? Name escapes me. I'm going to get the name and come back to you guys, right? There are 3 of them that are approved by SEC that you can fund in Naira and allow yourself to then invest or get exposure to the US market. So we want to take advantage of this because in the past, it wasn't possible, right? But now you can. So you can fund in Naira and you can allow yourself to then get exposure to the US market. And there are other markets you should get exposure to. But like I said, over 5, 10, 15 years, US stock market, US property market has been number 1 or number 2 in terms of return. When I mean returns, I mean inflation hedged return. So that's an option for you. You want to take a look at, right? Okay, so under DM questions, you guys are all shy. It's all DM questions. Hello, Kalu. Please, I'm in the US and in my early 30s. I started my career just last year and I currently invest $500 monthly on ETF. Very good. Let me know which ETF you invest in. Which other investment channels would you recommend I can invest on, or should I increase the amount in my ETFs monthly? Good. So you bought the ETF is the S&P 500. So you invest $500 monthly in the ETF. Okay. So if you are in the US, Mr. J, Joshua, if you're in the US, I want you to do it this way, right? So make sure you write what I'm saying down. This is how you invest if you're in the US or Canada or in the UK or any Western democracy. This is how you invest. Number 1, if your company offers you a pension plan, they call it a 401k in America, you want to make sure that you are matching their match. So what I mean is this, the company will tell you if you invest $1, we will invest $1 or whatever on your behalf. And they will say we'll do this match until you get to say 6% or 10% or 3%. They will give you a figure. So the first thing you want to do, you want to go to HR and say, my pension with you guys, do you guys match? If they say yes, you want to ask them, what is the percentage match that you do? If they say 5%, then the first thing you want to do if you live abroad is to make sure that you are meeting that match at the minimum. You can do more, advise you do more, but make sure you are meeting that match. Why? If you don't meet that match, you are leaving money on the table. It's like your company is saying, we're giving you salary, and you say, I don't want the salary. No, you must, and you see words I'm using, you must meet the match. If you want to do more than the match, that's preferable, but you must meet the match. So the number 1, you go to your pension fund and you meet the match that your employer is making on your 401k. That's number 1. Number 2, if you earn a certain amount, you can open what's called an individual retirement account. And I prefer you open a Roth, ROTH, Romeo, Oscar, Tango, Hilo, Roth individual retirement account. Roth is just the name of the guy that passed the law. Roth allows you to invest, right, into your own personal fund, the individual retirement account. But the cool thing is that once you invest in the Roth today, you pay taxes today, but you don't pay taxes tomorrow. You don't pay taxes at all ever again. So think about it this way. You just got to the US today. You have no degree. You have no income. Is your taxes higher or lower? Of course, it's lower today than what it will happen in the future. So if you are paying taxes today, you are paying at a lower rate than you would if you then make money tomorrow. So you want to do the Roth to pay your taxes today on the Roth so that going forward, you don't pay any taxes. And again, you can withdraw the Roth after 5 years, no penalty. So even if you're in the US and you think of you're going to come back to Nigeria, a Roth works for you. You contribute, you leave the money in the US, you come back to Nigeria, you can withdraw from your Roth and live in Nigeria. If you withdraw a traditional, which is the other IRA, you pay taxes when you withdraw. Maybe by then you have spent 10 years in America and your tax bracket has gone up. So you would pay more when you withdraw with a traditional, but you don't pay taxes when you put the money in. Listen, the Roth is so good that the US government will restrict how much you can put in your Roth. So you can't put everything into a Roth. You can only put a small amount into your Roth. So number 2, you open up an individual retirement account, Roth. You buy the ETF into the Roth. So the trick is this: anything you buy into your Roth, it doesn't matter if the price goes up, you are not going to pay taxes on it again. So if you buy an asset you think is going to go up in price and you buy it into your Roth, if the price increases by 1,000%, guy, you're not paying taxes because you already paid the taxes. So number 1, you go to your company. Number 2, you do your Roth IRA. When you have done number 1 and number 2, then you start doing your investment. I see you've already done that. You now start to buy your ETF. Again, you can just stay on ETF forum, but diversify, right? So now I see you're buying the S&P market, which means, Joshua, you're buying the entire market. Next is for you to go into a particular sector. So you say, okay, I want to do maybe tech or banking or property. So you are diversifying even within the ETFs. So you are saying, I'm going to buy the whole market. Perfect. Then I'm going to now start maybe buy property, i.e. property ETFs. Or I'm going to start to buy tech ETFs. So you are diversifying not just even in the US, but even outside the US. If you buy VYM, that's the Vanguard that pays you dividends ETF. But if you buy VYMI, that's the same Vanguard, but it's going to pay you a dividend internationally. So you see how you can diversify your holdings. You can buy Samsung, Alibaba, Honda by buying that VYMI because it's going to give you dividends, but internationally. Same way you buy VYM that gives you dividends, but locally. So within that ETF space, you can diversify into your Roth. And then when you have maxed out your Roth, you then start diversify into your own investment account. That's essentially what you want to try to do, right? Diversify into Roth. Why? Because Roths are cheaper. They have lower costs. They have tax advantages, and they're much, much easier for you to diversify. So just for a good start, keep it up. Don't stop investing, right? And if you have a comeback, just let me know. Okay, I see folks request to speak, but when I hit them, they disappear. I'm hooked on a technical problem. So Kalu, I am a Nigerian. I live in Kenya. I just kickstarted my career. What am I looking for possible investments? What ETF can I buy in Kenya? Well, the question is, what do you want to buy for? Yeah, Mr. IBI, right? What do you want to buy for? What's your objective? You want to buy or invest according to your objective, right? So if your objective is long term, then there are ETFs I can maybe say you should take a peek at. If your investment, if you want to just buy short term and get money market returns, of course there are other ETFs you can buy. So if you want to respond to me what your objective is, then perhaps I can give you more detailed answer, Mr. IBI. You just send me a DM, just send me back and say you asked for a possible investment, but long term. Okay, so if you're looking at the long term, is it long term in Kenya or long term just for you across the board? Which is it? Because the Kenyan market itself is a good market. It's like Nigerian market, but it's also very, very limited in terms of the scope of where you can invest in. I always advise, if you can buy, diversify, buy US, buy Europe, buy Africa. And let me give you three stocks, right? Or 3 ETFs. If you buy VT, if you guys Google VT, what you get? Google VT ETF. And I'm not recommending, guys, just want to give you how these things work. VT is the Vanguard Total Stock Market Fund. What does this mean? This means if you buy this VT, you are essentially buying, quote unquote, almost all the good stocks, quote unquote, both foreign, both US. You're buying all the stocks in the world. Not all, but all the really like great stocks, the great companies you have on earth, like that, like the ones that you know about. I mean, name any company you think it's quote unquote a good company. Tesla, Microsoft, Samsung. They invest in emerging markets in Europe, Pacific, Middle East, everywhere. I'm sure they don't have Nigeria. That's the only thing I saw. They don't really have a lot of African Nigerian stocks. I mean, Apple, Amazon, Nvidia. There are more than 9,000 individual pages here on companies that they invest in. This is just VT. So if I buy VT, I have bought really everything in the world. But what if I buy VTI? VTI. This is now the same Vanguard, but stocks in America only. VTI then gives me stocks in America only. So I can buy VT and get exposure to everything, buy VTI and get exposure to just American stocks. And I can even buy VYMX and get exposure to all the stocks without America. So you see how the ETFs work. You can actually do top down. You can say, okay, I have $100. I want to be an investor. So I want to buy all the stocks in the world and I want to target specifically America. So I can buy VT 20%. Then I can go and target America with VTI 20%. I can even now target Nigeria by buying the MSI index that tracks Nigerian stocks. I can also buy that. So the ETFs allow you diversification at a very, very cheap price. That's the whole idea. IBI has responded. Basically, I want to relocate after a short time. I'm here for a contract job. Let's just say across board. So good for this now. Do you want to sell this? Are you looking at buying it for the long term? So if you are buying for the long term and you are buying equities, do you want dividends or you want to just keep the money in here and allow it to grow for say 5 years? When do you want this money back? IBI, you're my case study today. So you see how I'm taking you down the journey. You've told me it's long term, right? But do you want dividends or do you just want it to grow and you want to get it at the long term? Which one is it? If you respond, I'll keep on responding to you. All right, Kalu, I'm a contractor engineer for an oil firm. I'm business oriented. Okay, what's the question? Okay, this is the private one. Abba has power 24 hours a day. Abba has a company called Geometric. So I think for Abba, you might have issues, Kelvin, because they already have geometric power. So even though your waste energy is perfect, you are going to run up against those guys. So I would think your best bet is to try to reach them and see if you can work with them in areas they don't cover, because they already have the license, which they fought with the Enugu State Distribution, the Enugu State Disco. So Abba is carved out. If Abba is carved out, you want to then go to them and say, hey, I have this waste energy. But the law says that if you produce energy below a certain megawatt, you can do that and sell. So I would think your best bet is to go to a large estate or a large community in Abba and then offer to sell them power through waste to wealth, because the law allows you to do that if it's below a certain megawatt, right? Your modeling is really going to be based on your off-takers. If you have off-takers, then you can do a financial model. So if you have 50 homes and they're going to pay you, then you can do your modeling. That's what the investors want to see you present. Who is going to buy the power? Because the guys buying the power from you is your revenues, right? And those revenues are what you're going to use to pay back any financing that you want to propose. But I will just tell you this. Utilities in Nigeria are high capex ventures. You've got to build and expect not to make revenues in the first 1 or 2 years because you are building. So your level of cash that you have has to be top notch. The guys today in Nigeria are owing a lot of money, right? And they still can't meet, they can't sell enough to get enough power or get enough consumers to pay them. So keep that in mind. This is a high capex sector, but because you are doing just to a community, you might go to that community, and if you get that buy-in to supply them power, you can get your payments back to you. Waste to wealth, that sounds like something that the foreigners would like because it's green and it helps the environment. So you have that tick mark there that you're doing something good for the environment. But again, you have to worry about geometric. If geometric's power from gas is cheaper than what you're offering from waste to energy, then you're going to have very, very low uptake. So the first thing I would do if I was you is to go and find out about how much do they pay per kilowatt hour from geometric power, which is gas driven. If yours can come out cheaper, then you can have a start. But if yours is the same or more, I don't think you're able to make any headway in Aba. Because Aba is a manufacturing SME place. So Mr. IBI has come back to me. He wants dividend. If you want dividends, look at VYM. Let me look at it. Go back there. So VYM, and I'm going to send it to you. VYM. If you look at that's the Vanguard High Yield Dividend ETF, right? So that stock is going to buy you companies that basically pay dividends and do all this dividend appreciation stuff. I like Vanguard because of the low expense ratios. There are many stocks, many companies online that you can do the same dividend investment strategy. I simply like Vanguard because it is, should we say, if you want to buy this VYM, the expense ratio is 0.06 IBI, 0.06. So if you are doing this, it's just 0.06. There are many other dividend stocks. So if you just Google dividend stocks or dividend ETF, because you're buying the ETF that then buys those stocks, you will then get many of them. But this Vanguard, I like it because it's cheaper. The expense ratio is cheaper. And they give you the stocks that they buy. So if you go to online, you'll see their portfolio composition. So if you want to build your own, you say you don't want to buy the ETF, but you want to build your own. They actually tell you what they are buying. They will give you the exact company that they are buying. This particular guy is buying Broadcom, is buying Exxon, is buying Johnson & Johnson, is buying Home Depot, is buying Procter & Gamble. So VYM, let me send it to you, right, is a dividend guy for America, the dividend paying ETF for America. If you do VYMI, that's now giving you the dividend payer internationally, right? So you can do a combination of IBI. If you're looking at dividends for the long term, I think VYMI is something you can take a peek at, right? And again, what I said, if you don't want to buy the ETF and you want to buy the stock yourself, you can go in and look at their composition and see if you can buy it directly. So for instance, these guys are buying ExxonMobil, and ExxonMobil is 2% of their portfolio. This VYM, Exxon is 2%. You can build your own and say, okay, I'm going to build my own portfolio with ExxonMobil 2%. You can do that. You can do it in your IRA. So you can actually go to your IRA or your 401k, or if they allow you to, and say, I want to buy this particular stock into my IRA and all that. That's one way of doing it, building your own, or simply say, I'm going to allow this guy take charge and build it for me. So those are the two for you, VYM and VYMI. Thank you so much. I've got a guy that's giving me the Infinite has just given me the names of the SEC approved apps that allow you to trade from Nigeria to the US, right? I used to use a particular app. I still use them. There's nothing wrong with them, but they were doing this before they got SEC licensing, right? So they are still there, but I'm not going to mention their name because they don't have the SEC license, but nothing wrong with them, right? But the guys that are licensed by SEC is Cowrywise, Bamboo, RiseVest, and Chaka. So let me see if I can. I'm just going to do a post right now with their handles. So if you go to my space or to my handle right now, you would see their handles: Bamboo, BAMB. So I'm going to just put it all there, so you can, in case you are interested. That's Bamboo. This is Chaka. This is Chaka. This is Cowrywise. Infinite is just to be clear, is I know Rise bought Chaka, but does Chaka have a license? Can someone confirm that to me? I know Shaka stocks has been bought by RiceVest, but does RiceVest itself have the license? If you guys can confirm that to me. But I've posted the three that I'm sure of, right? All right. Thanks, IBI. Thanks for that. Thank you so much. So let me see. Can someone open a Roth account without being in a job? No. Your IRA must be funded from your pay. So that means you can't open an IRA. You can't just pay money in it. You have to open it from. It has to be funded from end income. That's the word, end income. You have to fund it from end income. Oh, IK, hi. You have your hand is up. You have a question?
Yes, I do. Is it okay? I don't
want go for it.
Keep asking if other people have questions.
No, go for it. Nobody should question. Yeah, go for it.
Okay, great. Okay, talking about Nigeria, I know ways sometimes business people, like we used to do. I mean, my husband used to do before he passed. We used to do what we call treasury bonds or something. It's a quick way when the government needs money, you know. Can you speak to that? I don't know if I'm calling it the right name.
No, you're right, yeah.
We go through a relative in Lagos, and he's pretty good at doing that. He's an elderly guy, but he did accounting. I mean, he did economics in the US, and he made the first class.
Are you talking of treasury bonds in the US or Nigeria?
Nigeria.
Okay. All right.
So of recent, he's been wanting to help me with my funds, right, in Nigeria. I'm like, I want to use them, but I think I could do it myself direct, because you don't want to leave funds. You don't want your go-between to be an elderly person that can pass at any time. I'm just saying, okay? You know, I'm just saying. So can you speak to that?
Yeah. So if you were doing fixed income investing in Nigeria, right, there are, I would say, there are three classes of government issued fixed income that you can do in Nigeria. Three classes, government issued. Number one is the treasury bills. Federal government treasury bills. All they just means that treasury bills is the government borrowing from you for 90 days.
Yeah.
So, but treasury bills are only for folks that have a lot of money, because you need about 50 million or so to invest, right? So it's for short term. The government borrows money from you. You give to the government. The government, they don't pay you the interest, but they sell you at a discount. So they say, hey, give us 100 naira. No, how does it work? It's sold at a discount. So they will tell you, we're going to give you 100 naira in 90 days. Give us 95 naira. So you see, you've earned 5 naira. Yes. That's how it works. And it's because it's sold 50 million, so it's 5 times. That's basically how you make your return. They buy it from you. They say, give us 99 naira, and we'll pay you back 100 naira in 91 days. But it's for big boys, because you need about 50 million to buy it.
Maybe it was a big boy, right?
Maybe it was, or you can combine and buy.
Anyway, but I know at that time, that was like about 4 years ago or thereabout, when he was asking me. Gwen was asking that, you know, I wanted him to do something for me, you know, for funds in Nigeria. But I know he could do like 10, 5. It didn't have to be like 50. I don't know, you know. Well, the Nigerian economy is not stable, so.
Yeah, but I just to give you the other one. The other one is the bond. The bond just means you're investing more than 1 year. So you give the government money, and they pay you a coupon. They pay you a coupon every 6 months for the next 5 or 7 years, and they give you back your interest. That's basically what they do, right? But there's something called a savings bond now in Nigeria. It only needs 5,000 naira to invest. And you get about 11%, 12%, 13% on the savings bond. And you just can only invest with 5,000 naira, and they pay you interest 4 times. All these things will not beat inflation, but they give you safety. You get safety. Is the safest investment in Nigeria, because you will always get your money paid back. The government will always pay you back. Even if they have to print money, they'll always pay you back. So if you want to do that, and how do you use that, right? I know people that have parents in Nigeria, and they want to send money to their parents every month in Nigeria. They don't want any hassle. Listen, go take 10 million naira. So in dollar terms, is that $10,000? How much is 10 million naira? How much is 10 million naira? Okay. If I say
about 10,000 roughly.
Okay.
little less if you do 120.
All right. So let's say you have your mom or your dad in Nigeria and you're in America and you want to just pay them salary every month. Look at what you should do, right? You take $10,000, you convert it to Naira, and you buy a federal government savings bond. It will pay you 11% for the whole year. But they pay that money to you every 3 months. So you simply say, pay to this account, and that account will be owned by your parents. So every 3 months, your parents go and pick up a check from the bank of the interest, the 11% of your 10 million every 3 months. And you can, if you can maybe talk to the bank, maybe they can pay them monthly, and then the bank takes it to the 3 months, so they can give them money every month. So a very, very simple way to pay your parents a quote unquote pension. You take 10 million, you put in a bank account, every 3 months they get. Same thing if you have a child or you have a ward you want to sponsor through school, right? Don't take the money and give the kid and say, okay, next 3 months call me. No, open an account. It can be your account, but you can specify that the interest or the dividend or the interest should be paid to this bank account. So it's still your bond. You bought the bond with your name, right? But as long as you are training that child up, you say, what's your account number? And you tell the bank, pay my coupons from this bond to this bank account. So every 3 months, the child gets the interest from your dividends, right? That's what you used to go to school, right? Every month. And you can do this for many things. You can do this for your school association, for your age group, to sponsor orphans, to pay your kids. You can do a lot. And it's the same 10 million naira owned by you. It sits there in Nigeria, but you are using the interest to sponsor many things. So once you have no interest, you have no money to give anybody because you can't break your principal. So it's a way for you to also budget. You can say my budget this year is not the principal I'm paying, but the interest I will earn from investing in Nigeria. That naira, that naira is what I'm going to use to sponsor all my charitable projects in Nigeria. And again, you even get tax breaks, right? So that's a good way to do it. So you get the income, but you also help people out. Yeah, go ahead, Oweke.
Great. But is that a fixed interest rate? You mentioned
Correct.
11%.
Yes, that is a fixed interest. It will not change. The interest will not change for the period that you invest. Yes. So if you invest for 2 years, 11%.
Interest varies depending on the time you invest.
No, it's going to be locked. If you do 2 years, 11. If you do 3 years, 12. And they bring it out every quarter. So once you buy it, it's locked. Yeah.
Okay.
Mm-hmm. That's why I say it's a good way.
The next question will be, thank you so much, will be how do you go about it without really using, I don't mind using a go-between, but is this something I could do myself?
Of course.
You know, like I said, someone wants to help me, an economist.
No, nobody should help you. In the year 2023, no one should help you. You can go online, right? Any bank in Nigeria can buy you a savings bond. Any bank. Any stockbroker can buy you a savings bond. Go online, tell them I'd like to buy a savings bond. They can set this up for you online. I can give you a particular name. The guy that was here with me 2 weeks ago, Mr. Ebo, he works for Optimus. Look for it. I'll send you a DM. Any registered, regulated bank and stockbroker can do this for you. Anyone. You don't have to beg anybody or help, or no one should help you. Yeah.
Of course.
So just go online. Yeah.
Right.
Buy it in your name. So you're buying the bond in your name. But the dividends, you then tell the guy you want to give money to, give me your bank account, right? And then you can say, I like the coupons to be paid to this bank account. So the principal is yours, but the coupon is what is going out. Yeah, that's what you can do.
So can I buy through my own bank, the present bank I'm using now?
Yeah, in Nigeria, of course. Yes. Of course, yeah. Mm-hmm.
So what are the most reliable banks? Sorry, I
most reliable banks. all banks in Nigeria are reliable. Just go for the one that gives you good customer service. So I mean,
I don't know. They're all this. I don't know.
I use a combination of FCMB, Zenith, GT Bank, and within that sector, you'd find something that you like. You know, I mean, just get that. It's really the account officer, not the bank. It's the account officer that you have. Because whatever bank it is, if you go to the best bank in Nigeria, you have a lousy account officer, you get lousy service because you're not in Nigeria, right? So if you can get someone that you know, because it helps the person to is their target. So that there are lots of bankers that would love to know you because you're going to send them money. I have a girl that's always on my DM telling me, please tell your friends to open an account with me. You know, if she knows you, she can get your dollars, because you're going to send her dollars to her DOM account. So she gets that target inflow. Then she also buys you bond. That's 2 targets met. Then she's even opening a current account for you. That's 3 targets met. So you are the one that has the yam and the knife. You should choose with the one that you really want to work with, and you can get this done. It's a no-brainer for them. They want your business. Yeah.
Of course. I when I go, I know how they want to be around you so much. I have an account. I have 2 accounts actually. I was just asking, maybe because things keep changing in Nigeria. You don't know which is which, right?
I got you.
Banks may be going under. You never know.
Go for the they call them in Nigeria the Fugans. They call them Fugans in Nigeria. I think that's the acronym. I think it's First Bank. I think it's Access Bank. Fugans. That's the name they call the acronym to refer to the biggest banks in Nigeria. Go for the big banks, but go for the ones that you can get an account officer that you can speak to. That's what's really important in Nigeria. The account officer. Yeah.
So UBA should be the U of Fugan.
I believe so, yes. FU, then Guarantee, then Access, then Zenith, Fugans, yeah.
Right.
Yeah, that's...
I have a Zenith account.
Okay.
I have, okay, yeah.
Yeah,
okay. Thank you so much again.
You're welcome.
Down. Can you drop me so that...
Yeah, sure.
The go to listening is not working, right?
Oh, gotcha.
Thank you.
Let me do that.
Thank you, sir.
You're welcome. Take care. All right, so I just... did that. Okay, so again, someone is asking again on DM, are bonds paid yearly or quarterly? Bonds are paid semi-annually. So when you buy a bond, you are getting payments twice a year. If you buy the savings bonds, however, you are getting paid quarterly. So savings bond are the one that you buy for 5,000 naira, you get paid quarterly. But the normal federal government bonds, you get paid bi-annually. That's the big one, right? The one that you need a lot of money to buy. The treasury bills, you don't get paid an interest. You buy on discount. So your interest is the difference between what you buy today and then what you sell, what you then get from the government. So that's just treasury bills don't pay you interest. It's a discounted product. Bonds pay you twice, and savings bonds uniquely pay you 4 times a year. Moro, sorry, how you doing? Sorry if I killed that name. Moyo, sorry about that. I apologize. I can hear you. Your audio is not that good, but go ahead.
Okay, good. Thank you for this question. So my question is, if there an opportunity for people who have like pensions accounts with pensions agency in Nigeria to be able to make use of the funds to invest themselves, because I know after you take up, I think 25% after you use your job for a while, you can't use the funds in your pension account anymore. But I'm just asking, like after a couple of years, is there any other way that one can reinvest the funds that is there?
Okay, I hear you. Can you mute? Let me mute you. So I mute you because there was an echo, and you weren't very audible. Let me repeat your question. He's asking that Nigerian pension funds, the retirement savings account, he's asking, is it possible for you to take those funds and invest yourself? Because right now, the PFAs invest on your behalf. So he's asking, after you take 25%, is it possible for you to invest yourself? Well, the sad answer is no. There is no direct investment allowed in Nigerian PFAs. We don't have Roth IRAs per se, right? So once the PFAs allow you to do is to choose the fund you want to invest in. So you can say, I want to invest in the high yield, high return, high risk part. I think it's fund 1, or you can go to fund 2 that has more fixed income. But you can't tell them, invest in this particular thing or that particular thing. They have their own guidelines issued to them by the National Pension Commission, and that's essentially what they stick to. So the answer is no. I think now they've allowed the RSAs, the retirement savings accounts, you can withdraw a portion, and that could go towards paying a mortgage. So you can do that as a down payment if you like to get a mortgage. That's what they've allowed now. So 25% can go towards a down payment. And of course, you know that if you lose your job, you can also get 25% of that, of the fund. I think it's 25 or 50. Last time I heard it was 25 of the money in your account given to you because you're not working. So those are the two ways you can choose it. For now, no direct investment, Moyo. Yeah. Hope that answered your question. Excellent.
Excellent. Yes, thank you.
Thanks.
Can I ask one more question?
Sure. Your audio is bad, so if you speak up, I'll...
Is it any better now?
Go ahead.
I'm trying to shout. Go ahead. Okay, so I want to ask for someone who earns in USD monthly, is there a way that one can directly invest like part of one's income before they come in? Like maybe I can tell my employer, okay, I want to invest maybe in the US. So before you pay me, can you help me? Like maybe can I help you deposit into something like an investment account maybe in the US so that I don't have to have access to that, and then I can get it from that over time in the future.
And just to be clear, you work in the US?
No, Nigeria. Well, I had US.
Okay, let me have you mute. Okay. Okay, so he's asking that is it possible, he works in Nigeria, he earns in dollars, he's asking is it possible to allow to tell his employer or whoever it is to do a direct debit at source and invest? The answer is yes, but it depends on how your organization is set up. There are many easy ways to do this. It depends on where you are getting paid. If you are getting paid in a Nigerian bank, that means you can then have to invest through a Nigerian app to the US market. If you are getting paid in an American bank, it's easier to just go direct from your American bank to say TD Ameritrade or to Vanguard or whatever it is and invest. So the American side is very, very easy. The difficulty is if you are in Nigeria and they pay you your money in Nigeria. If they pay your money in Nigeria, there are many ways you can do it. You can go to a Nigerian stockbroker, or you can download the app by yourself. Those are your two ways to get it done. But the answer is yes. I'm not sure if your organization can do it. That's going to be organization specific, but you can definitely do it. You can say, I get these monies. You go to your bank, say, hey bank, not your company now, the bank. Tell the bank, hey bank, take 10% of my money, direct deposit, and pay directly to this firm or that fund. That is possible. I'm not sure if every company does that. It's again specific to your organization, but it's possible to create that sort of direct deposit arrangement. Yeah.
All right. Thank you very much.
You are very welcome, sir. I get crypto. Let me get Wealth Print. Wealth Print, go ahead.
Hi, good day. My question is this. I have interest in any monetary investment, no matter how little it is. But my question is, I have up to like $10,000 in my credit card, but I'm not using it wisely. So my question: how do I even use this money to make more money through investment instead of using it to shop every time on Amazon shopping stuff I don't even need? It's very, very annoying.
I agree.
I really want to make money using that credit card, or just every time I have a very good credit score to set up over 700 credit score. But I'm not using this money. I don't know what I'm using this money for. Anytime I'm on Amazon, I'm checking shoes, I'm checking stuff like that. That is not why I want to use the credit card. Sorry, this is my first time. I'm still shaking.
No, you're fine. You're fine. I think it's an excellent question. Excellent question. So let me just say this, right? The only time you should use your credit card is if you can repay in 25 days. Let me say it again. The only time you should use your credit card is if you can repay the full amount in 25 days. Why 25 days? Because the normal cycle is maybe 30 days. I'm not in 25 days so that you have full clearance. Anything you want. So when you say, can I invest with my credit card? The answer is yes, if you can pay back within 25 days. So if there was an investment that you saw in the US and they told you, you invest today and in 25 days you get your money back, sure, run your credit card and invest. They give you your money back, you pay your credit card back, you make a profit. But where can you really find those investments? I don't think they exist, because there's no investment really that you can do unless you want to trade in the stock market. You say, okay, Boeing stocks are going down, but I think they're going to go up in 30 days. So I'm going to use my credit card and buy stocks and then pay back. But that's a huge risk. And let me tell you the problem with this buying with credit cards. Credit cards anywhere in the world are the most expensive form of lending you can have. They are double digits. It doesn't matter your credit score. They are 20, 21, 25. So they are used for working capital, not for purchases. Remember what I said, you pay back in full in 25 days. So what I would say is this: change the way you look at your credit card. Go and get a credit card that gives you points. Points, which means every time you use the card, you get points. Either you get air miles or you get cash back. That's the card you want to go get. The way you profit from a credit card is you use that credit card with points to buy everything. You pay your PUD, you pay your water, you pay your whatever, your groceries. The same thing you would have done with your cash or your debit card. You do it on that credit card with points. Then you clean it up 100%. So what do you get? You get the cash back, you get the points, you get the air miles. That's what you want to do with your credit card. Your credit card cannot make you returns. Your credit card can reward you for good behavior, but it cannot make you a return on your investment. So if you have a credit card today and they're not paying you points or rewards, how many credit cards do you have? Do you mind me asking? How many do you have?
I have one for now, but I'm trying to open another one, but I'm thinking.
Okay, so if you have one and you have a credit score of 700, I don't know what your debt to income would be. Maybe you should try to maybe get, does the one you have give you points?
Yeah, it gives me like 2,500. It gives me $25, which is very, very little, you know.
What do you mean 2,500?
2,500 points. If I exchange it, they pay me $25. You know, I'm up to
Okay.
5,000 now. Very soon I'll be getting $50, and that's not so little.
Yeah, but that's the only really way you can do it. Unless you want to get a point that gives you miles, that's the only way you can do this. Like I said, it's either you do payments for 25 days or you get points. There's no other way. There's no other way. If you want to borrow to buy an asset, like you want to borrow and buy shares, can that share run and turn around in 25 days? You don't know. Once it doesn't go back 25 days, you're going to pay interest. So it eats away the potential profit you would have made. So I wouldn't advise that. So for credit cards, the only thing you should do with your credit card is to get points or working capital that's paying back in 25 days. Apart from that, I wouldn't advise you to use it for anything else. So just go online and look for the highest points card. Maybe get the highest points card and get that one. Then convert all your groceries to that points card and at least get something back. But you can't make money from it. It's a reward. It's not a return on investment. You see?
Okay, thank you.
You're very welcome. And keep at it, right? You're doing the right thing, but don't put the balance on your credit card. That's the biggest, most expensive debt you can have, especially in America. They make money if you don't pay. So don't give them money. Good job. All right, I've got G2G Lexington.
Yeah, good evening.
How you doing, sir?
Yeah, I'm fine. Yeah, concerning the explanation of bond, that someone can buy a bond and earn money with it. I want to ask maybe if there is any to any chance that someone can go about that because of we don't know what kind of businesses they do with the money, and I don't like taking interest from those things. I don't know which bond can you recommend for someone, like someone that don't want interest from it. Is it only bond? Is it meant for interest only, for saving and making money? Is it only for that? Is there any?
Let me ask you direct. Do you want to earn interest? So a bond is IOU. A bond is an IOU. When you say you are buying a bond, you are giving a bond to somebody. It can be the government, it can be an individual. And then the person pays you back your principal with interest. But question for you, I heard you say interest. Do you want to earn interest? Are you okay with any interest?
No.
Okay, so if you don't want to earn interest, there are federal government bonds that do not pay interest but still give you a return. They are called Sukuk bonds. Sukuk.
Okay.
Sukuk. If you send me a DM, or let me just post it up. Sukuk. Let me see. I'll try to post maybe the sum on the. If you buy the Sukuk bond, it's still the same federal government Sukuk bond, right? But it does not pay you interest. You know what Sukuk means, right?
S-U-K-U-K, right?
S-U-K-U-K. S-U-K-U-K. If you Google it, just Google Federal Government of Nigeria Sukuk bonds.
Okay.
FGN Sukuk bonds. It's sold by, there are 5 banks that sell it, or 5 institutions. It's sold by Jaiz. Okay, I tell you what, right? I'm going to copy this out and I'm going to post it on my page, so you don't make any mistakes. So I'm just going to copy it. I'm not going to do a screenshot. So if you go to my page in the next minute or so, you will see the subscription form. It would have the name, blah blah. So you pick the name from here. I'm just copy this down. I just copied this. So I'm going to go to Twitter. So if you go in the next minute, you will see the subscription form. And I'll also copy the institution. So what you should do is maybe go online and contact one of these institutions and say, I'm interested in the Sukuk bonds. They bring them out they bring them out all the time, right? Ask them, okay, is it out? Do you guys have any I can invest in? Because you want to do a bond. The idea is that it's a safe bond. It's the safest investment in Nigeria. So I've posted it now. So if you go to Twitter, it's on my page and you see there. It's the safest investment in Nigeria because it's the federal government you are lending money to. But this is what we call the ethical side of investing. So they're not going to pay you interest, but it's also a bond. So I've posted both the name and the institutions. That's Jaiz, Lotus, Stanbic, Sterling, and Taj. Those are the 5 guys that run this on behalf of the federal government. It's a federal government instrument. So have you seen it now?
Yeah, I've seen it. I've already liked it, so that
good.
We'll go for it later.
Yeah, so that way you can do the same thing. Ask them that question. I think it's the same way it works. The idea I was giving the lady was that if you have dependents back home in Nigeria, instead of you are sending money back home to them, you can simply say, I'm going to buy this bond, and then the returns on the bond you then pay to their checking or savings account. So the principal is still your money. You take the principal with you wherever you're going to, but the returns should then go to those people. That's the idea we're quoting. So find out from these guys if they can do the exact same thing for you. Yeah, I think it is possible. Yeah, they do that same thing with you. Yeah.
How much percentage do you think the return is?
Ooh, I think, let me see. Non-qualified investors. The minimum here is 10,000. Let me see if no fee should be paid. It says no charges or fees will be paid to investors. So Sukuk is all about profit sharing. I don't know if you're of the Muslim faith, but Sukuk basically means.
I'm a Muslim, so that's why I was asking about the interest of the thing. So
yeah,
that's why
I would ask the guys, because it's already stated here that no charges or fees will be paid by investors. So you're not going to pay any charge or fee. The whole idea is profit sharing. When they invest in the bond, they are giving the money to the federal government for the federal government to build a road, and the federal government will then pay them back. So there should be a way they will pay you back with a return. So if you can confirm that return from them and then say, okay, I want the return on my principal paid to this account, I'm sure they can do that for you. So you are getting your principal back, but the returns is what you are giving to your next of kin or to your beneficiaries or to your charity in Nigeria that you want to sponsor. Yeah.
Okay, thank you so much.
You're welcome. Yeah, and if you can't get any headway, send me a DM. I should be able to get someone that will specifically talk to you. Yeah.
Okay, I will. Thank you.
All right, super. What is going on, guys? I think I would like to. Okay, I see the problem is not adding you folks here. I'm surprised. All right, just if you can't get, just send me a DM. I'm using a second phone, not my real phone, but let's see. If you can't get added, just send me a DM and I will do that. Right? Yeah. All right, so let's go back to DMs, as it were. Yeah, bonds seem to be an issue. You guys have never heard of bonds? Okay. Yes, so bonds are IOU. There's nothing difficult, there's nothing complicated about them. If you lend Dangote money, Dangote gives you an IOU. That IOU is called a bond. That's really what it is. So Dangote can say, okay, I will pay you back your principal with interest. That's in bonds, it's called a coupon. So that coupon is the same as your dividend. They just call it coupon. In bonds and in stocks, they call it dividend. In banks, they call it interest. It's all a return on your money. Quick word here. When you want to buy bonds, don't look at the percentage they quote on it. You know that what they quote on the bond is just the percentage you will get at the end. If you are trying to buy a bond during the life of the bond, let's say for instance you want to buy the bond that is going to mature in 2049, don't look at the interest that they are quoting on the face, that coupon that they issued on the face of the bond. Don't look for that. Ask the banker to tell you the yield to maturity. The yield to maturity. That is the yield that you will get, not the coupon on the bond, because you didn't buy the bond at the issue and you might not hold the bond at the end. So if you are planning to buy a bond, just you have money you want to trade, you don't look at the coupon, you look at the yield to maturity. Just a quick word there, just so you're aware, right? So make sure you ask them the yield to maturity. Anytime you are buying a fixed income investment, ask them for that. The same way when you want to borrow money from a bank, don't ask them for the interest rate. You ask them for the annual percentage rate. Annual percentage rate. Don't ask for the interest. Interest rate is just the interest cost of the loan. But if they have management fee, legal fees, it's not going to be included in the interest rate, but it will be included in the annual percentage rate, APR. So when I want to borrow, you ask for the APR. If you want to invest, you ask for the APY, annual percentage yield. Yield return, real return, right? All right, folks, again. So believe it or not, guys, we spent nearly 2 hours here. So, yeah, we're going to wind down whatever happens in 30 minutes. It's a short impromptu space, and I'm glad for the questions. I do appreciate them, guys. Great questions so far. Let me keep on reading. Do you think Nigerian stocks are a good investment? You know, that's an interesting question, and I just paraphrase his question, but that's what he's asking, if I think Nigerian stocks are a good question. I posted something last week. I want to get what I posted and read it out, because I think it is very, very important. The guy was trying to explain that the market perception that when people invest when stocks are going up and they sell when stocks are going down, that is the wrong way. That you should do it the other way around. That you should actually buy when stocks are going down, and you should sell when stocks are going up. It's an actual. I posted it, and I want to read the exact text of what they said, because I found it very interesting. When you hear Warren Buffett saying, "Buy when there's blood on the street," so he's saying that when stocks are down, that's when he's buying. That's Warren Buffett, right? When stocks are down, that's when he's buying. And when stocks are high, that's when he's selling. So let me I want to get that exact quote, guys, so I quote it. But OIK, your hand is up. Go ahead.
Yes, Mr. Carlo. Regarding what you're talking about, stocks, buying when stocks are going down and going up, I think we're getting into the realm of trading, more or less. I know that's different because, again, it's forex you're dealing with, learning about the candles. Because when you trade, that's what you want to do. You want to look at the trends, right?
No, I mean, you can still buy long term. I mean, look, copy what does Warren Buffett? Warren Buffett is one of the richest men. I heard you completely, and I heard you. Oh, okay, I heard you. I heard you. let me mute her. Let me tell her mute. I don't know if can you hear me? I can hear you. Why? Did you hear me? I heard your question completely. Demi, if you can hear me, just give me a thumbs up. I want to answer your question. It's very. I like the question.
Hello?
Oh, okay, I heard you. Did you hear me? I heard you. Can you hear me now? Demi, if you can hear me, give me a thumbs up, Demi. Demi or Paul or Bernard or someone. If you guys can hear me, give me a thumbs up. Can you guys hear me? Hey, if you guys can hear me, give me a thumbs up just so I know I'm good. Yeah, there we go. Thank you, Crypto. I appreciate that. So, I mean, it's a very, very good question that she's asking, and also tying into the point I was trying to make about when to buy a stock. So, thank you so much, guys. Yeah, look at one of the richest men in the world, right? Warren Buffett made all his money from the stock market. How did he do it? Warren Buffett gets cash and he waits. When the market falls or he sees an opportunity, he buys. He doesn't trade. So trading is just short-term buying and selling. But what Warren Buffett is doing is buying what we call value investing. He's picking value. He's looking for stocks whose intrinsic value is lower than the market value, the market price that you see on the stock market. So when you go to the stock market of every country, you see a company is quoted at X dollar or X naira. That is the market perception of the value of that company. So a company, Apple, is worth maybe $2.3 trillion. That's the market perception of that company. But what is the real intrinsic value of Apple? The value of Apple is the present value of all the future profits that Apple will make, taken down to today. That's the calculation. If I know exactly how many mango seeds a mango tree will produce over its lifetime, I can tell you the value of a mango tree. Very simple. So if I know that this mango tree is going to produce over its lifetime 10,000 seeds of mangoes, then I simply calculate 10,000 by a price, and I can tell that the value of this mango tree is X, which is the mango seedlings multiplied by an interest rate. Very simple. The problem is that who can estimate how many mango seeds this mango tree will make in years to come? Nobody can. Who can also determine the interest rate I'm going to use in future? Will it be 9%, 5%, 1%? Nobody knows. And that's why, even though we know the way to do it, it's very, very difficult to do it, because we don't know how much earnings Apple would make or the interest rate in the world in 3 years from today. So folks that are able to make a lot of money in the stock market, like Warren Buffett, are able to do their own calculation as close as possible to the answer. So when Warren Buffett bought Coca-Cola, he calculated that the intrinsic value of Coca-Cola was way different from the market value of Coca-Cola. In this case, the market was undervaluing Coca-Cola. So he bought Coke, and later on the market then caught up with his own valuation of Coke. That's how he has made money. So when you want to buy a stock, let's leave stock out. If you like Gala, every day you buy Gala, like I said, every day you love it. Would you buy more Gala if the price went down or went up? So let's just say every day you buy Gala, you went to the store and told that, this week we're doing a sales on Gala, and if the price goes down, you can buy more. Everybody here will buy Gala because we all like Gala, so we'll buy it at a cheaper price because we know the price is we're going to enjoy utility from the Gala. With stocks, we tend to think differently. When the stock price is going up, we want to buy it. But when the stock price is coming down, which is giving us a discount, we tend not to buy it. And that's the point I'm trying to reach about the article I wrote just this week on Twitter, that investors are irrational. They prefer to buy the stock when the stock is going up in price, which is more expensive, than when the stock is going down in price, which is a discount. If we walk into a mall and we see a shoe is on sale, we tend to buy. But when we go to the stock market and we see stocks, good stocks on sale, we tend not to buy. We say, oh, stocks are crashing, so I'm not going to buy. But we don't take the same thinking when we go to a mall and we see a shoe on sale, because we have this bias to loss aversion. We don't want to invest and make a loss. We prefer to make a profit than to make a loss. So if you tell someone, make 50% of 1 naira, they agree with you because they want to make 50% of 1 naira. But if you reverse that question to the other way and say you will only lose 50% of 1 naira, they don't like it. But it's the exact same question. But if you say make, they invest. If you say you would only lose, they don't invest. So one thing so if you trade off the bias or the irrationality of the market, you can make money. Because people would do something irrational because they believe that the market is rational, so they are irrational. I'll give it a good example, and it might be a bad example, but a good example as well. Boeing is having a lot of problems in America. They can't seem to make planes anymore. Their planes have crashed, people have died, right? So lots of regulators are all over Boeing. Boeing stock has gone down. Do we think that Boeing is still a good buy or a bad buy? What's the argument on both sides? On the bad side, Boeing is going to be under serious regulatory oversight. So they're going to spend a lot more money on, overworking, overhauling, training. They're going to spend more money on that. They're already making a loss today. So their stocks are at a negative. But look at the entire world. There are only 2 companies on earth that make wide-bodied planes. Only 2, Airbus and Boeing. And even Airbus today cannot make all the planes. If Boeing closed today, they can't take up the slack. They have a long waiting list. So that might tell you that whatever happens to Boeing, they will suffer today. But 10 years from today, they might be back in business. So the question is, are there stocks which are down today? Are they at a discount? Or are they still overpriced, knowing that the returns or the earnings of Boeing are going to be impacted in the next coming years? That's the question for you. If you think their stocks are still overpriced, you don't buy, because they will still come down as more cost overruns with oversight regulatory happen. But if you think that today that the stock has been battered, that people are selling the stock because they believe that the stock has been overvalued and not taking into account the poor engineering, then you buy. That's the whole idea. Your intrinsic value is when you buy or you sell. If you value something at 10 naira and the market values it at 20 naira, do you buy? No, you don't buy. But if you value something at 10 naira and the market values at 5 naira, what do? You buy, because the market price is lower than your valuation. So you buy it at the market price, because eventually the market will get up to your valuation. That's the entire thing about investing. You want to buy at a price lower than your intrinsic value. Ati for short. How are you, sir? Welcome to the space. How can we help? Yeah, Ati, just unmute and you can speak. Go ahead. Otherwise, let's go back to messages. Because one is clarifying to me that SEC, so that RiseVest is licensed by the US SEC. Chaka is a Nigerian SEC license only. The acquisition will let RiseVest offer direct stock trading to its customers through Chaka, while RiseVest itself remains an investment advisor offered managed investments in the US. So in fact, you're saying it's a combo now. So Chaka will be Nigerian and RiseVest will be the US. Okay, I hear you. So we've put the three that are registered: Chaka, Cowrywise, and Bamboo, SEC registered in Nigeria. Yeah. So someone's asking a question again: do I get my principal back from the federal government savings bonds, and how come the accountants don't tell us these things? Yes, you will get your principal back from the federal government savings bond. You give the government your principal. The government will give you back your principal with the interest paid quarterly or semi-annually, depending on what you buy at the end, right? So if you buy the bond today, then the bond will pay you coupons. At the end of the period in 2049 or 2035, you get your principal back. Yes. OIK, I think I could.
Hi. Yes, I got cut off.
I could hear you perfectly well, and I heard your question.
Oh, okay. Okay. Well, it's not exactly a question because I've been exploring, right? Because I'm trying to figure investment, both the risky, short-term, long-term. So of recent, a few months ago, I've had some time. I've been in between jobs, and I was actually looking to invest, but then I got caught up into. I didn't do it, but I tried. I just kind of did a demo, trading, forex trading. So talking about buying when something is going down, looking at the trends, that's in the realm of forex trading, so to say. What do you think about forex trading?
Well, I would. That's the forex trading. Number one, I wouldn't advise anyone on this space to do it. Why? Number one issue. Let's say you make profit. Let's say I agree. You did forex trading and you made 10% profit. What does that translate to in return? Because to trade forex, you are trading. You guys are do trading. You are trading what they call the pips. Look at it this way: when you trade forex, you see $1, £1, and they give you 4 currencies, 4 numbers behind the 1 point. So. Why? Because the spread is so narrow when you trade, say, dollar to euro. The spread is so narrow that even if you make profit, you're making profit on the 0.1 or the 0.2, that you have to do a lot of cash, like billions in cash, to actually make profit. So I see Nigerians saying, I'm trading forex. Okay, what's your principal trade forex with? I'm trading forex with $100. You're wasting your time. Even if you make 100% return on $100, that's $1. It's not even up to $1. It's not up to $1. 100% return, because you need volume to trade currency, because there's no spread. The trick is this.
It's for the big banks.
It's right? For if you have retail, money.
Right. It's retail not forex trading. But you see, I'm sorry to cut you off, but you see, there are these guys in Nigeria. Some of them are making money. In Africa, people do it there.
If US, they are making money, they will not tell you.
But they're trying to bait people into getting into it.
OIK. If they're making money, they won't tell you about it. And no one makes money and tells you about it. The idea is this. So
they're making and losing big time, right?
And so let's be clear, right? Just to clear what I'm saying, right? Spread in Nigeria is very, very wide. The spread between the naira and the dollar is very, very wide. So I can with $100 make 100 naira, make a lot of profit in Nigeria, because the spread between the naira and the dollar is very wide. So if you are trading dollar naira, you are going to make millions of naira, quote unquote, right? But if you are trading dollar, euro, dollar, yen, marks, you can't make any money with your $100, because there is no spread. There is volume. Whenever you have available volume, there is no spread. That's why you don't make money on those, what they call the major pairs. You can't make money there. But in Naira, what we call trading is not trading. It's simply buying scarcity. So I buy dollar today at 1.2. I know it is scarce, and I simply wait. 2 months time, dollar is scarce. I sell for 1,400. That's not trading. That's doing scarcity. I buy rice today. I keep in my warehouse. People want rice for Christmas. I sell. That's really not trading. You are not trading off the highs or lows or the DFI. That's not what we're doing in Nigeria per se. We're calling it trading, but it's really just because there's no rice or there's no gala, so I buy gala in bulk and I sell. That's not what we're talking about, right? The guys that tell you you can make 20%, 50% trading dollar to yen. No, you are dealing with guys from Goldman Sachs, from JP Morgan. That's what they do every day. For you to go into that market, you need research and cash. Why are you there? Can you make money? Yes, you can make money, but it's high risk. So if you want to do trading, sure, go for it. You can make a lot of money, I agree, but it's high risk. I don't talk about trading because I don't want to encourage people to get into it. If you want to trade, it's gambling. There's no other word for it. Someone says, okay, but stock trading is also gambling. Yes. Once it is trading, it is gambling because you do not know the future. This policy problem with stock trading. You can stock market is one market where you can go to. You can call it a casino. You can go to, and you can know exactly what you would lose. So I can go to a stockbroking site and say I'm only going to lose 10%. How? I buy limit orders, I buy stop orders, and all that. I can even hedge my position. But when you go to the currency markets, can you limit and hedge and all that? Yes, you can. But the more limits and hedges you buy, you are reducing your profitability. You can sell dollar short and buy euro long. But when you do all that with $100, what are you going to make? Nothing. So you need volume, you need the research to make any money at all in the currency market. But the stock market, with $100, you can buy one Tesla or one whatever stock, and it'll go up in price or fall in price. Oh, okay, quick one before Ati wants to speak. Oh, okay, go ahead.
Great, thank you for that. I thought so too. I thought it was pretty high risk, but again, they say some of them are making money. Really, they are, but some of them just want to brag and get people into their fold, into their business, and then see them, ruined. But the point is, they often talk about trading in the base pairs like GBP and USD and all that. They never mention in their spaces, okay? They never mention, that it's trading in USD, NGN, right? But now you can't even trade.
Yeah, you can't even trade Nigeria dollar because the naira is not convertible, so you can't even do that trade. But remember this: there's something we say in the market.
Why can't you do that?
The naira isn't convertible. It's not a convertible currency. The convertible is a term. Yeah, it's not the English term convertible. Convertible means a term that is not. You don't have enough liquidity. It's not freely flowing. The naira is not convertible. Okay. Only those major pairs are, which means that tomorrow, if I want to, on this phone I'm talking to, right, I can hit a button and buy $100.
Right.
I don't have to go to the Central Bank of America or the Central Bank of Japan. On my phone here, I can buy $100. The currency markets are not regulated. But the naira, you have to go to the Central Bank of Nigeria or get a currency to buy it. So it's not convertible. So that's out the question. That's why I said we're not doing trading. We're doing scarcity. We buy dollar, we sell dollar. That's not trading, right? But again, the major point is that when there is volume, spreads narrow. You can never buy dollar, euro at more than 1 or 2. It's not going to happen. Leave it alone. So JP Morgan guy will take 50 billion and make on 1 cent trade and then make 50 million. But you take $100, you do the exact same trade, you make 0.01 cent, the same 100%. So what's the? So leave it alone. I don't know. But
no, I wasn't going to do it. I just wanted you to talk about it.
Oh, gotcha. Yeah,
they're always on spaces. The big guys. They're ostentatious. They show off on Twitter, you know. They talk big.
Any loud money.
Risky.
Any loud money is a question mark money. Any money you see that is loud is question mark money. You will never see Goldman Sachs. They know how to brag in other ways. But any money you see that is loud, come on, I'm doing commodities, and I have a Benz. I'm doing currency trading and I have a Rolls Royce. Is any loud money? Put a question mark around it. Ati, what's up?
Yes, thank you very much for this opportunity and thank you for all you're doing. I have two questions. The first one would be, how do you know when to sell? So like you said, I don't do trading, I do investing. I've been holding for long, but sometimes it's a question of when should I sell?
Okay.
So that's the first question. And I say that, not for things like this S&P 500, that one, no problem, let's hold that one for life. no wahala. But things like Amazon or Google or, Apple, for example.
That's a great question.
When do you know when to sell? That's the first question. The second thing would be, so I live in Canada and I have this weird stock that I've been holding for a while and it's been making money. And that's what's making me question when to sell. It's called CSU.co.
Let me look for it. It says CSU?
Yes, .co. Constella or something. And one of the things that make me question when to sell is because I don't even understand the stock. I was on one space somewhere, sometime, somebody mentioned, I checked it. The chart looked really attractive.
Give me the ticker. Give me the ticker again. CSU.
CSU, yes. CSU.to.
Okay. All right.
Okay.
Is that constant still software?
Yeah. Yes, the software, exactly. So, long time ago, somebody mentioned it. I checked it. The chart looked really attractive. I put tiny thing inside, kept making more. I started adding more. It's still very green. It's still constantly going up. But it always scares me because I don't understand this. When you understand the stock, you can say, you know what, don't worry, Google will be fine, even if it goes down. This is one of the reasons I'm asking, number one, when to sell. Number two, looking at the stock like that, I don't even have an understanding of that stock in the first place. So at least I can have a background knowledge of that stock, especially that specific one.
Yeah. So it's a great question on when, and it's a good question. You ask the question, and we'll use this stock as our case study, right? Okay. So just glancing at this guy right here, PE is the price to earnings ratio is about 107. That tells you that this is a very, very high. That the market wants to buy this stock so bad, they are paying 107 times its earnings. In other words, if you bought this stock at the price today is $3,000, right? $3,591 for one stock of this. If you buy this stock, it will take you 107 years at the current rate of earnings to get your money back. That tells us two things. It's either this stock is the next Google or this stock is the next Enron. It's either of them. It's either it's a growth stock that is growing so fast that we want to pay 107 times its earnings, or this stock is at the end of its teeter and it's just trading now. It's just people are manipulating or whatever. That's the market is trying to push it up in price. It could be any of them. You can't buy or sell just on PE ratio alone. But the dividend yield is 0.15. So they don't pay any dividends per se. They're a software trading company. This low dividend yield tells you that they are still in their growth stage, which means that if they had matured, they will be paying you a lot more dividends, which ties into the PE of 107. Market cap 76, not a lot. Look at the price range. They've gone from 2,200 to 3,600 in just 1 year. So this could be that they've reached the end. If I do the 5 year to date, let's do the max return on that. Look at the max return from 2015. This stock has been going up and hasn't looked down, right? It's just that's what you're saying. It's just been going up and up and up. The question for you is this: look for their market share. You want to get the balance sheet of this company, the annual report, and read the market share. You want to look for that the point that they are increasing market share. If they are increasing market share, I wouldn't sell it. If they are increasing market share, because it's software. So these guys must be growing by either buying. It says the best acquirer of tech firms. I said it. So they are growing by acquisitions. They went public in 2006. That's when I started to go up. They have 25,000 employees, and they are growing by acquiring tech firms. So this is like a big company, a conglomerate that buys other tech firms. And that's why they have that high valuation, because the market is looking at them as a tech firm, as a startup. So the market is pricing this stock as a tech firm. So their profits and loss will come to how good they're able to buy firms going forward. That's why it's this high stock. So let's go to your question of when should you sell a stock. You should never sell a stock whose market share is increasing. You don't do that. You should sell a stock whose market share is falling because of a structural competitive issue. I explain in English. If I own a stock that makes black and white televisions, and the company stock was growing market share every year, I wouldn't sell it. But the day color televisions came out, and the market share of my black and white TV company started to fall because the structure of the market had moved to color TV, then you sell. So you don't sell on the profit or loss. You sell on the fact that what would happen to this company's market share because of the introduction of new technology or a new law. Let me give you a better example. Oil and gas, ExxonMobil, Chevron, Shell. Should you sell those companies today? What about British American Tobacco? Should you sell that company today? Why are we asking this question? Those companies are facing serious regulatory issues and also a change in the health consciousness of their end consumers. Less and less Americans are smoking. More and more Chinese are smoking. So if I own a company in America that sells cigarettes, an alarm bell should be going off that, okay, the party in America may be over, but the party in Asia and Nigeria may be starting. Actually, did you get the point I'm making? You want to look for what would affect the market share. That's what you want to look for, not the profit. What will affect the share to fall? If you can't see anything in your horizon, you are okay. But be very careful. Have you heard of a company called Blockbuster?
Yes.
Who killed Blockbuster? Netflix.
Yeah.
Have you heard of a company called Barnes & Noble?
Yes.
Who killed Barnes & Noble? Amazon. And the competition does not come direct. Blockbuster, I don't know how old you are at you, but back when I was growing up in Nigeria, we had video club. So you go to if you want to watch a movie, you take your VHS, you go to that club, you pay registration, then you borrow a VHS cassette. You borrow like 3. You go home, you watch it, you take it back, you borrow it. So that was video club was Blockbuster. Blockbuster was everywhere in America. When the movie comes out, Blockbuster will get the movies. You go and rent from Blockbuster. When this small company called Netflix started, their idea was CDs, but they were posting the movies. They will post it to you, you watch, and you post it back to them. But Blockbuster had physical stores. Netflix went to Blockbuster and said, hey, we're a small company. Do you guys want to buy us? They were laughed out of Blockbuster, laughed out of the building. Because Blockbuster did not see the threat that a postal agency sending videos would have. Then Netflix changed from posting to sending you the videos through the internet. And Blockbuster still didn't see it till it was too late. Now Netflix killed Blockbuster. When should you have sold Blockbuster was when it became possible to send videos online. That's when you should have sold Blockbuster. If you didn't see that strategic shift in consumer finance coming, you would have looked at Blockbuster sales and said, wow, they are still growing, they still got assets, and you'd have ignored Netflix. So that's why this company CSU is growing, because they are buying IT companies. But remember, IT companies are the quote unquote, and I'm being very careful here, they are one of the most opaque things to value. Because you can't. They'll tell you we don't deal with profit. We deal with eyeballs. We deal with traction. We deal with end user. They don't deal with cash. This company won't have cash, but it'll be valued more than Berkshire Hathaway, that had tons of cash. So you want to look for this company and find out really is there. You can't use market share in this company because it's acquisitions. So as long as they keep on buying, they might keep on growing. But you know what I'll do with this company? They're not paying dividends. If you've made your principal back, take out your principal, and then stay there. At least hedge that part.
Well, you say take out your principal. Like I said, I started this thing with like $20 back then, like 4 years ago, and the $20 kept multiplying so much. I was like,
take out 40, and then take out 40.
Is the question here?
Greed is good. Greed is good. Greed, like this is golden gecko. So you are good. Take out $40, right? Then do something else and lead this to Jesus. If it goes up in price, you are good. Whatever happens, you are good, right? But it's a it's a tech stock, which means this whole thing will come crashing tomorrow. Interest rates would help this company, because if interest rates keep on going down, this company stock keep on going up, because they are borrowing money to buy. So they are borrowing money to buy more and more companies. So that's one factor for you. But it's difficult to say market share, because they're going to buy some companies you haven't heard of. The market is valuing them this high because they are a tech company. So they're like a conglomerate buying other tech stocks. That's what they're doing. Yeah, if you look at their marks and their PE, that just tells you what it is. It's $3,000 for one stock. $3,600 for one stock. Jesus Christ, man. It's up 19,605%. 19,000. Crazy stuff, Artie. But good luck that you found this. You found it early. Take out your money or whatever, your principal. You've made your money, Abi. Leave the rest there. And you take out 50%. I mean, you've cleaned out already. You know. Don't sell. So if this was company selling cake, I would say okay, we can do market share. But this one is hard because it's IT. Who knows the next IT guy? We don't know. They might bring something out that will say, okay, what news 24/7? That's CNN. Who knows? If I told you to buy CNN 25 years ago, would you have bought it? You'd have said no. Why would I buy a company that makes news 24/7? You would have said no. Or Snapchat, buy a company that puts a fake thing on a picture. You'd have said no. Why would I buy a company that's going to put stuff on TV? No one have bought it. But now look at Snapchat, look at CNN. Ayodeji, what's up, man? We're gradually come to the end. We got about. Ayo, what's up, man?
Good evening.
Hey, Ayo, what's up?
Yeah, I'm fine. Thank you. I really enjoyed this evening. Well done. Thank you.
Thank you, sir.
So mine is a form of let's call it advice, or just to shift in advice to me anyway. So I will create just 1 minute story. I work with a Francophone company where I stayed in the Francophone country last year. I left there around April. So I have a saving there, which is like a 15 million CFA, right? So if I've actually brought that money back to Nigeria, by then, the money will be around 10 million, right? So I left the money there, and I realized that the Naira keep on depreciating. Now, the 15 million CFA that I have by then is like 20 million Naira now, right? So my question now is that I cannot leave my money there forever. And when should I bring the money in to Nigeria? Knowing fully well that Nigeria is keep on depreciating, Naira is keep on depreciating, and I cannot even figure out what I want to use the money for here in Nigeria.
Okay, but why not just buy dollar with the money? If you can't figure out what to do with it, why just keep it in dollar? At least it will protect you from Naira inflation.
Okay, that's another thing.
I mean, there are many ways you can protect it. I mean, if you hold Naira is 30% inflation. CFA is kind of the like Euro. CFA is France. That's even better for you because France will guarantee some protection from inflation. But if you are just in doubt, put it in dollar, bring to Nigeria, buy a Nigerian dollar fund, leave it there. They will even pay you interest in Nigeria. So in Nigeria, you can put dollar into a savings account in Nigeria, and they will even pay you interest on top.
Yeah, okay. I think that's good. That's good.
Yeah. So look at those options. Yeah. All right, super. Legacy. Go ahead, sir. Legacy Capital.
Okay. Good evening, everyone.
How are you, sir? Can I have just increase the volume a bit? Can you just increase the volume a bit, sir? Legacy, go ahead.
Can you hear me now?
Yes.
Okay. Actually, I just want to speak when the lady was talking about forest stuff. That was why I really picked up I requested the mic. See, the actual thing about forest is, just like you said, is high risk. And one misconception, the whole issue around forest trading, like speculative, it's just a speculative trading when dollar is going to go high and when it's going to go low, when other pair will gain momentum and the rest of all those things. And it is a fast market. It is a short-term something. It is not something you say, okay, you want to hold for like years or this thing. No. Most of, like, if you check those people that do normal position trading, they do position trading at maximum duration of 3 months. That is quarterly shift. When you have quarterly shift, there are people that takes in a trade based on weekly directions. Now, those 3 or 4 days, you cash out your profit or you take your loss. You see, that's how it works. There are people that also do day trading, which means you open a position today, you also close your position today or the next day. So for me, what I just want to point out is, me personally, I'm into forex. I'm learning to trade forex. By the special grace of God, I'm profitable. There are different secrets that are inside of it that people doesn't really know. But when you see people posting profit and the rest of all those things and shouting and telling you to come and pay mentorship, majority of the people, just like the statistics said, about 95% of those people are not making profit. That's a fact. But right now, I can tell you that number is not up to 95. At least, let me just say 90% of people are not profitable in the forest. And forest is not something you rush to do. It's a gamble with a statistical edge. You have an edge, but it is a knowledge-based skills. Because just like you keep on explaining on here, when you understand macro analysis, how interest rates operate and the rest of all those things, how they devalue and inflation and deflation, most of all these things are the things that gives you your insight on how you speculate on this market and understand the market. You now make profit out of it due to positioning. And when you talk about you using a lot of money to trade, yes, forex requires a lot of money, because what you are buying, you are making little change out of those things. But the reason why you see people use $100 to trade is because there is something that is called leverage. When you go to a broker and you open a live trading account and you deposit $100, and that broker is giving you 1 to 100, which means your $100 is being multiplied by 100. Then when you have a leverage of 1 to 500, that your $100 is now being multiplied by 500. If you have up to 1,000, it's being multiplied by 1,000. So it just inform of you have $100 in your account. That's $100 you have in your account is to guarantee your risk inside the market. Just like in form of you are putting something like a down payment for you to speculate inside of the market. If you are right, you make profit. If you are wrong, you lose that. The loss that you are going to take is going to be on that $100, for example, that you deposited.
I hear you, but now, look at it this way. Okay. I completely get you, and I like the way you are approaching this. How do you think the trading company makes money?
In terms of the trading company, we know that there are different types of trading company that use B-book, in-house trading. That use B-book, in-house trading.
No, I mean, what I mean, like
companies that use A-book,
legacy,
that they send your orders to the live market.
Legacy. Wait, what I mean is that you've already answered the question. They give you money to trade. They give you money to trade. So when you give them $100, they lend you $100 to trade. What's the interest rate on that money they lend you? It's not free. What's the interest rate?
The interest rate of that money, see, the issue there is this: when you place a position to trade, the company takes what they call a spread.
I know, but what's the
5 people, 4 people, and the rest of all those first, just some charge commissions.
I hear you. No, commission is fine. I'm just saying that when they give you the margin, what's the interest rate on the margin? Do you know?
Interest rate on the margin that they pay you.
No,
that the company collects.
When you place $100, the company will give you $100 to trade. That's not free. They are charging you interest on the one they give you. So what's the cost?
It doesn't work like that. Look at how it works. The leverage is for you to have for you to be able to buy more than the money that you deposited. Now, when you are taking a loss on that your speculation, just for example, like if you are using like something like 0.01, which means in each point, like you said, you are in each point like 0. If you are using 10 cents per point, which means when the market goes against you by 1 point, you are losing 10 cents.
I know,
but
your $100. I know, but the question
if you are using $1 per point, it goes $1 in loss against you.
I hear you, but what I'm asking, you've already mentioned it, you've already called it correctly leverage. You've called it leverage. So what I'm not trying to get you. I'm not trying to get you. I'm trying to people are listening. I'm saying the leverage has a cost, and where I'm going to that's how they make the money. They want to give you money to trade. It's not free. Why would they give you $100 to trade?
Mr. Carlo, just like I said earlier, Forex is a gamble. It's a statistical edge. So
I hear you.
Knowledge.
I hear you. But what I'm saying is that if you go to
know that 90%
you're not answering my question. You're not answering my question. If I walk into a casino today, they don't give me money to trade. The casino, there's a casino near my house. They don't give. You bring your money, you play, you lose, you walk out. If I go to trade, I give them $100. They will give me $100. That is leverage. That's what I'm saying. They are giving you that money so you can trade more. So I'm asking you that $100 that they are trading more, it has a cost. You see where I'm going to? It has a cost.
Me, I don't really get your own cost, but the cost that me personally is associated with it is when I'm wrong. If I don't place any trade on my account, they don't charge me anything.
Of course.
But once I place a trade on my account, they minus their spread. So if I'm trading something like Euro USD and their spread is 3 pip, they minus 3 pip as their own charges, not on the leverage that they gave to me, but on my balance that I have. That is $100.
If you call it leverage,
now, if I also lose any amount, or that I'm wrong in that trade, I lose certain amount of money that I've placed. That this is the place whereby if the market goes against me up to this point, stop me out. Let me accept this risk. So
I hear you. I hear you, but what I hear you. What I'm saying is that once you take leverage, there's a cost.
Okay.
There's a cost.
There is no other cost inside of it.
Okay.
So far, there's no other cost. There's no cost except if you are losing or you place a trade. That's where the cost comes in.
All right. Let me bring
placing a trade. But for me, I will not advise anybody just because somebody is brought a Range Rover to your house and you jump to go and start trading Forex. I will not advise anybody, because if you don't have the time and the consistency to study and understand the market, at least for a minimum of 3 to 4, 5 years, I will not advise you to put money, because it is the fastest way to depression if you don't know what you are doing.
Gotcha. Lawal, I got you. Let me get Olumide. I heard that conversation.
Yeah, I actually wanted to. Yeah, you were making so much sense. I just wanted to expand on the last speaker's statement. You mentioned earlier that trading is not suitable for retail. You are so spot on. In fact, if I had the powers of the land, I would definitely ban retail FX and stock trading, particularly for low-income earners and retail investors. And the reason is simple. If you look at the United States, for example, the maximum leverage for a United States citizen is 50-1. But the market is really not regulated in Africa, particularly Nigeria. So some brokers put as high as 200. And leverage is a two-edged sword most times, particularly in a market that is so full of uncertainty. You really detailed on how these things work. And I did a trade, and I was explaining to traders that, see, these are the reasons why bank traders are successful in forex trading, and this is why you will never be successful in forex trading. I worked in an investment bank, and I was trading FX, and I saw the advantage, the edge. They have the ability to see other inflows. They also have the ability to move so much capital and borrow capital at highly reduced cost. Now, the critical advantage a lot of people don't even understand is the software and tools they use. The trader that is talking is using an MT4 trader. He's saying the broker only makes money from spread. That's what you think. Now, I can tell you behind the lines that the MT4 trading platform is an open software. So what many of these brokers do is that they tweak. So if you're a trader, particularly, and you follow the market, you will notice that when you trade on this open source software, you are prone to slippage, you are prone to margin because of the way the charts move out. But when you trade on Bloomberg terminal, it's much more different, because Bloomberg doesn't really make money on the transaction itself. The exchange fees, and they connect you to different direct feeds, bank feeds, to the exchange fees directly. So it's a much more sophisticated platform. So these are things many retail investors don't. And when you mention these things that you don't trade FX, it's not suitable for they think you don't want them to make money. And Carlo, I think you've rightly said it. If you don't really have capitalized funds, you are gambling. I've been trading for close to 18 years, and I can tell you categorically that I never put my money on certain instruments because I don't have the capacity financially to trade those markets, not because I don't have the, and I understand the limitation of my systems. These guys use supercomputers to make spreads count. You are working with
Olumide, just for people that are listening and for Legacy, let me explain to him how they are making the money. Legacy, when they give you that $100, right, you now have $200. When you place a trade, they see it. When you place your trade by 1 o'clock, your trade will happen 1:01 or 1:02. Their computer would buy and sell to you at 1:01. It's legal. It's called front running. It's legal. Google it, what I just told you. When you place a trade, they go ahead of you. They immediately buy and sell to you. So the way they make a profit is to make you to trade. If you look at Robinhood, who their Citadel Capital buys their front trades, and they go in front of you. So in America, if you have money, you can legally go to your investment bank and say, I want to front run what Nigerians are buying. So if Nigerians place a trade by 1 o'clock, that trade happens 1:02, 1:03, 1:05. They would buy at 1:01. So because there's no loss. You want to buy Boeing, okay? They will buy Boeing and sell to you. They've made a profit. Who has the risk? You, because you are the one that's borrowed $200 to buy Boeing. They don't have a risk. They've bought Boeing and immediately sold to you. That's how. So when I was asking you the cost, you don't see the cost because they are. This is why I say don't get into this thing if you don't know what it is. These guys are very smart. Why would anyone give you $100 if he's not making anything from it? Why? Americans will give you $100? Legacy, your hand is up. You say, Legacy, are you saying?
Yeah. Carlo, me personally, I understand some of the risks. And one thing is this: we are always prone to learning, and this thing. We are always prone to learning. Me personally, I normally like to, bring myself down to learn new things, because the more you grow in your knowledge, the more you earn, the more your capacity increase. So for me, in this one, you said front end, you said front buying, right?
Yeah, they go ahead of you. It's called front. I don't know what's the exact word. I can Google it first and send to you. They go ahead of you.
I will do my search on it.
Yeah, it's algorithmic. It's a computer that is buying. That only me just said it to you now. Slippage. When Olumide said slippage.
There is A book and B book.
No, leave A book and B book. Once it's a computer that is buying, that computer they go ahead of the computer will first of all buy in seconds. It will let me tell you something here. If you go to America, the New York Stock Exchange, right? If you draw a straight line, before in the past, before you had computers, you had to have a floor on the New York Stock Exchange to buy. Then someone invented NASDAQ, blah, blah, blah. Now you have computers. They found out if you can draw a straight line from the internet service provider to your office from the New York Stock Exchange, your trades can go a second faster. That 1 second faster is billions of dollars. So there are movies on Netflix that have this information. Netflix movie, you see this was a movie where the company tried to buy land so they could build a straight line from the New York office to where the ISP was. Real life story. It's not, I'm not giving you a story. A second. So when you buy from Nigeria or you buy from America, the big boy is going ahead of you. That's a hedge fund guy. Olumide, go ahead, please.
Yeah, and that's why I said that these things are not suitable for retail. In fact, if you look at why many hedge funds and prop trading firms situate their office in New York and New Jersey, it's because of what you just said, the comparative advantage. And, you also need to look at the edge against the retail. The software is full of bugs. When news come in, you see sometimes the platform freezes, then your margin, you are exposed to margin. For example, I don't trade crypto derivatives because the odds are just simply against you. The market is very volatile. Futures itself are very... And if you look at December report on Bloomberg, a lot of traders lost money, not because they were not smart, but because they were trading against computers in the oil market. This is not even stock market. In the oil market, Bloomberg did the report. Goldman Sachs guys lost a lot of money. But when you tell people that, see, you are not even eating properly, you are considering trading, they think you don't want them to make money. So, and everybody has that. But if you have this personal finance acumen, or you've mixed with people that play in this industry, they'll tell you for free. If you are not properly capitalized, don't go near it. Simple.
Well said. Let's get Ifeanyi. Ifeanyi's hand is up. Olumide, thank you so much. Ifeanyi.
Greetings everybody. As regards the issue of the FX market, whether at the retail level or globally, I, to an extent, agree with what Olumide said. I've burnt my finger severally, and in fact I had to run away from it because, like you said, if you are not well capitally grounded, don't go close to it, because the stories or the euphoria behind the whole thing most time don't look the way it is, because behind the scene, like you said, Mr. Carlo, there are a lot of manipulations going on, mostly with the software or the hedge fund guys. And the retail trading, most times we do here with the maybe $1,000, $2,000 or $100 or even $5,000. At the end of the day, you believe you make some money. Why sometimes the market goes against you? And like the story of the Bloomberg December trading, those who traded oil, people really lost money. So for now, like you tell most people will still tell you, Forex is a market could make money. Like I think Mr. Olumide said 5 years. 5 years is still somebody who is a trader for 5 years, you still lose money. I think what matters is beyond the skill set and getting knowledge, even with beyond the people who have been professionals in the industry over years, because 3 years can make you an expert. Because Forex is just like a refined gamble. That's the way I see it. It's not something definite or that is accurate, because when you look at the risk to the risk reward, the risk is higher than the reward, so it's always a reverse issue. It's like they always tell you, if you don't have money to lose, don't put in such money here. I've met a friend who used to have a big church, and each time he would tell his members, all of you should go and trade, all of you should go and trade, there's money in trading. And I called some of them, I said, come, how much did you start trading with? He said $100. And the man said $100 for $1 million challenge. I laughed. After 2 weeks, I called some of them, how far? Said the man, they will be sending signals for them. Could you believe this is we just left December. Nobody made up to $20,000. I'm even going for $10,000. So the reality is different from people's perception, especially when you see people say, "Oh, but why the man is able to survive in that market?" Because I always tell people around, it's better you go and learn a skill set that will give you money. Don't put all your focus in this industry or in this market. It's meant for the big guys, not for you, who is looking for daily survivor. At the end of the day, the man was able to survive because he had a large pool of resources. This is somebody who has lost over more than $200,000, but he's still waxing strong because he has an oil well. Okay. And you are still battling with $1,000, $2,000.
If I hear you I don't want us to just to be clear. It's not if you want to trade, there's not a problem with trading. I'm just giving people the pros and the cons of it, right?
No, I'm not against trading.
No,
I'm just saying
I hear you. I hear you. I get you. So I think if you are listening, I mean, you've gotten a bit of a sense of it. If someone front runs, it doesn't mean you will make a loss. It just means that's why you are getting the leverage. So there is no free lunch in China, or as there's no free lunch, right? That's why you're being given those loans to run. Mr. M, is that right? EEM? Mr. M? Thanks so much. Yeah, please go ahead.
Yes, thank you, everyone. You've all spoken good. I just want to add one or two things just to clarify things. The broker gives you a leverage. The idea of the leverage is to make you trade. Because when you trade, the broker makes money. Now, you ask the question, how does the broker make money? They make money from spread, majorly, because it's just for those who don't understand this trading. Spread is like, when you go to Malam now, you want to buy dollar. Malam says, oh, you want to buy, is 1,100. You say, no, I want to sell. He says, no, it's 1,050 naira. Now, the difference is the spread. So if Malam takes your money, 1,000, maybe you want to sell, he's going to give you at that 1,100. But that same dollar he collected from you, if someone else wants let's say you bought from him, he gives you, you pay him 1,100 and he gives you dollars. If you come back and want to sell that dollars, he's not going to give you 1,100. He will give you 1,050 naira. He has already made 50 naira. Now, anytime you open a trade, the broker takes the spread. So whether you are selling or buying, the spread is already the first thing the broker locks in. So if you open a trade and close the trade immediately, broker makes spread. And then the lot size, the standard lot size is $100,000. If you don't have $100,000, broker gives you leverage. That leverage is making you feel as if you are trading a big amount of money. And then when they charge the spread, they charge you as if you are making big money, and you never lose that $100,000. The moment you use your $100,000, the trade closes. So, I mean, it's very simple to understand if you go and study like you want to study like a degree for an exam. Don't study like you want to make money. Go and study it to understand how this works. And then someone also mentioned that MetaQuote is an open source software. Actually, it's not open source. It's a trading is common, but it's developed by MetaQuote. It's not really a matter of being open source or whatever. A broker can decide to play games with shifting your trade, delaying, freezing your entry points, and things like that. So these are some brokers, but the genuine brokers will not do all those things, but they focus on taking spread and then commissions. So they charge commissions when you leave your trade overnight. They call it swap. So these are the different ways they make money. Secondly, someone else mentioned A book and B book. In some jurisdiction, both are legal. Even the B book means if you place a trade, let's say you tell the Malam, hey, I'm giving you this 1,000.
Okay. So
you buy dollar.
Yeah, Hold on.
Yeah.
I don't want to. We're not going to get too technical in A book, B book. I get what you're saying, but I don't think we should get that technical. The point I'm trying to make, the actual term I was looking for is order flow. Order flow. It is legal So in America, companies will sell your customers' orders to market makers. It is legal. Google it. Order flow. So the way these guys make money, hold up. It's number one. You've said they give leverage. There's nothing wrong with what you were saying. The companies give you money so that you can trade. That's one way they make money. But number two, they also sell your orders, and those companies get ahead of you the line and buy. So I just, there's no need to. We're not debating anything. It's just explain like you've done. You've given us a good explanation.
We're just in front.
Let's not get too deep into the weeds.
That happens. So that's why the brokers will also offer you instant execution or market execution. So market
execution is still not going to address order flow. That's what I'm saying. You order at 1, they can get in a second or a millisecond ahead of you. It's a computer, and it happens. I just tweeted you. This is from Bloomberg. So Citadel and Robinhood. Robinhood makes 80% of its revenues from selling customers' orders. 80%. And Robinhood is SEC registered. So it's regulated, it's legal. 80% of Robinhood's revenues come from selling customers' orders to Citadel. So it's not a debate. I'm just saying we know what it is. Doesn't stop anyone from.
I'm not arguing with you. I'm just saying what exists as well.
Okay.
I mean, it just like arbitrage is legal in US as well. They encourage that so that everybody has to. If your broker if you can buy a stock or a currency, whatever, before the other broker, it's not and go on another platform and then you do the simple. It's just what I'm just being a.
I appreciate that. I just don't want you to go too deep so that we don't lose the room as per se. Let's go to speaker. Speaker your hand is up, guys. I get the point, but let's not make it a technical. I want people to follow. Speaker, you've got the floor. Speaker is not ready. Let's go. DK, you ready? Speaker, go ahead. What's up? DK.
Sorry, are you? Hello.
Go ahead, sir. You got the floor.
All right. Thank you. Am I audible enough? Hi,
DK. Please go ahead. DK, go ahead. DK, go ahead. What's going on? Please go ahead, Mr. Speaker. You are audible enough. Please go ahead, sir. Make your contribution. I don't want to hear about trading, guys. I think we've gotten the point about trading, but go ahead. Go ahead, sir.
Sorry, are you referring to me?
Yes, sir. Please go ahead.
Okay, thank you so much. Actually, I just came up to give some minor correction on what Ifeanyi was saying. He's saying the right thing, but I just wanted to know that Forex world is not something that is just easy to understand. It's a game of mind.
Okay, guys, I don't want it to be I appreciate your comment, really, but I want you to go straight to the issue. I don't want it to be a trading space per se, Just go straight if you don't mind, sir. He's made his contribution. Just make yours and go ahead.
Oh, okay. What I just want to... Okay, sorry. Is what I have in mind to say is just to give... Thank you.
You're welcome. Thank you so much. Ragnar, how are you doing, sir? Go ahead.
Hi. Good evening, all.
Good evening.
Still on. I know you don't want to prolong this trading, so I just want to mention something concerning Robinhood. I've followed what happened over the last few years, especially when it came to AMC, GameStop, and the rest of it. What Kalu is saying is exactly 100%. Citadel Securities, they front-run the order books and place trades just in front of their customers. And it's unfortunate that many people don't know about this, and that is how they make a lot of their money. And the sad reality is that
this app, when it was formed, they called it Robinhood. Do you know why they called it Robinhood? Because when you think about Robinhood, it was a tale of taking from the rich to give to the poor. So they made the masses, download this app. Let us give the little guy the chance to invest and trade like the big guys. But what it ended up being is reverse Robinhood.
But how is it reverse Robin Hood?
Let's to the big guys.
Yeah, but let's
on Netflix and watch these things. You will see.
Yeah, but
why
bro,
the little guy hardly makes a profit in these things. Thank you.
Yeah, but let's not demonize Robin Hood. I use Robin Hood. Without Robin Hood,
I'm not demonizing it.
Yeah, so many.
Even you know what happened in those Netflix documentaries. Just we know these things. Well, I just wanted to bring that point out. Thank you.
Okay, so the point again is this, right? Robinhood democratized stock investing. They made it very easy, very simple to invest. I don't care if someone front runs me. I don't care. For me, I don't lose anything. If I want to buy stock and you sell to me and you add 1 cent to it, that's fine. But it allowed me to invest. Many companies, I would not have bought the IPO without Robinhood, because Robinhood was buying those IPOs and then giving to us at the retail end. So it's bad and it's good. America is a wild, wild west. Everything is capitalism. So you get the good, you get the bad side of it, where someone can buy your trades, but also give you access to the market. So it's, you're going to lose here and gain here. But net, I think that their introduction, i.e. Robinhood's introduction to the market, was positive for the market. Many people, the app is so easy to use that would not have known how to buy shares, learned how to buy shares, learn how to do research. It's all visual, even options. You can see it all there. I wish it was available in Nigeria. I wish, because many people would learn these stocks. It's so easy to use. Maybe it's a bad thing that it's so easy to use, but it's so easy to use Robinhood. You don't know how to trade. It will tell you what you're looking for, how to research it, how to buy. Is just a button. Maybe it's a bit too easy, but I think net was positive.
I agree with you completely. I think on balance, net it's positive for the little guy. So I guess the name still makes sense. It's just that sometimes I feel that these little warnings should be there for people to know how it actually works. Many people before 2020 didn't know their trades were being front-run.
True.
And I agree with you. Net, it's positive, and
America is an interesting country.
Yeah, go ahead.
America is a very interesting country. I remember the time I found out that the police in America were private, and that the police job is not to protect you. It blew my mind that the police in America. So let me give it back. Someone sued the police and said, I called the police, they did not come, and because they did not come, they kidnapped her children. She told them, this person kidnapped my children. The police did not come. The children got killed. Very sad. So she sued the police, and the police defense was, it's not our job. We're not mandated to do that. We're not designed to protect and serve you. I was shocked. And I always see on police, protect and serve. So America is a very, very funny society that you must know what you're talking. That's why lawyers get paid a lot in America. Things you might take for granted, like you're saying, no one knew front running is illegal. Why would it be legal that I want to buy a stock, but somebody will go ahead of me and buy and sell to me, and it's legal? Doesn't make any sense to you. Actually calm down, but hey, it's America. Gary's Corner. How you doing, sir? Gary, you got the floor. Gary going once, Gary going twice. Mr. DK.
Yeah.
Hey, Gary,
What's
welcome.
Up, everybody?
Go ahead, sir.
Can everyone hear me? Okay. Fine. So, that is a very interesting way to address me. I'll just please stick to Jerry. Yeah. So, speaking on trading and retail trading and all of that, a couple of people like me have become more interested, or rather have become interested in trading on the NGX via Trove, Chaka, and the rest of other persons that have given us the ability to do so, right? So in this era where it seems like everybody is moving their money, questionable and unquestionable, into the NGX, is there a reason to be extremely cautious as to investing in this period where everything is green and very few or almost nothing is red?
So I will ask this: if you wanted to buy a house, and all the houses were going up in price, but you wanted to buy a house, you had the money, you wanted to buy a house to start a family, would it concern you that all the price of the homes were going up in price or going down in price?
It concern me if they are going down in price.
Why would it concern you?
Because I would feel that it's either a quality issue or the value is not what it seems.
But you want to buy a house for your family. So would that stop you from buying the house because the prices were going down or up in price? You have the money, you want to buy the house, your wife.
No, it really won't stop. Now look for what I like.
Exactly. So it's the same thing with the stock market. If its price is going up or coming down, what matters is your objective. Why are you investing? If you are investing for your pension long term, it doesn't matter if the stock is going up or down. You still have to buy, right? If the stocks are going down, is that an opportunity for you to buy good stocks at a good price? Many guys became billionaires. When the 2007 recession happened, a guy made $5 billion buying or betting that the mortgage in America would collapse. So the point I'm making is that it doesn't matter really. People always say market is up, market is down. That's the TV guys trying to make news and to make content from an action. The market will always go up and always come down. This year I tweeted tongue-in-cheek satire that my predictions for this year is that the market is going to go up and down. It's satire to say that the market will always go up and always come down. So it doesn't matter really when you buy, as long as you are buying according to your objectives. Mr. Warren Buffett would buy a company as long as the intrinsic value he has determined of that company, right, is higher than the market. It doesn't matter if the market is up or down. What is his intrinsic value? And then he compares that to the market value, the capitalization of the market. And that's really how you should do it as well. If you want to buy something, do you get more or would you pay more? That's your question. If it's what you want a house, your wife wants a house, you need a place to stay. That's it. You go buy. If prices are going down, you buy at a discount. If prices are going up, you buy at a premium, but you've got your house. That's really what you want to buy the house for. Make sense, sir?
That's nice. That's nice. Thank you.
You're very welcome, sir. Thanks for joining in. DK, go ahead, sir. Mr. DK, are you still there? DK going once, DK going twice. I've got Spreaker. Spreaker, I believe you've spoken. Original Nigerian, how are you doing, sir? Original Nigerian, appreciate you. Forex trader who suffers from the consequences of trading. Go ahead, sir. Forex trader. I hope we didn't attract all the stress. Oh, IK, welcome back. What's on your mind?
Thank you. Nothing much. I'm sorry for bringing this forex trading issue. I just wanted some people to be aware, even though most people are aware that it's a high risk. But when something is trending, you tend to want to really give it a deep dive, and I think some of them should be rethinking it. Unfortunately, you cannot wipe out retail forex trading. The market is huge, right? So people think, okay, they can gamble too, and those that are really making it big, they're not really telling the nitty gritty of everything that is going on, right? So yeah, I came up again just to remind you to DM me so I could, we could do the more of those your books.
No, you DM me. I don't have it. You DM me.
Okay, I will DM you.
I've just sent.
I don't know if I'm able to DM you, but I'll
okay.
try.
I've just sent. I just sent. Okay, now. So I've sent you a DM.
No problem.
Yeah, I'll buy it in the US, and I will. I think Nigerian guys are going to be out of books very soon.
No, I bought already from the US. The US is about $10. Amazon.
Yeah, I will buy okay. For you.
Never mind.
No, I will buy.
I just need to buy like 5 more.
That's what I said. I will buy it for you with the author's discount. Then I will post to you. So if I buy for you, if you can pay the shipping, I will post it to you. Just DM. Yeah, that way you it's a bit of a discount. Yeah.
Okay. I'll DM you.
Sure, no worries.
Thanks
okay,
again.
You're very welcome. Thank you.
Okay, you're a very lovely, kind human being.
Thank you, ma'am. Appreciate it. All right, so I got a question here. How do I calculate if the stock price is less than the market price? Okay, so we already know the market price. That's given to us. So if you go online to any stockbroking firm, you see the market price. So that's already there. The question is now, how do you calculate or compare your own stock price? I believe you are talking about the intrinsic price, because the stock price is the market price, right? So I think you are asking me, how do you calculate if the stock price or the intrinsic is less or more than the market price? Because stock is market. Okay. When you see a stock saying it's worth 10 naira or $10, what it means is that if I take the total earnings of that company from infinity and I bring it back to today and I discount it with an interest rate, I will get 10 naira or $10. That's what it means. If I know this, I want to compare what my calculation of that intrinsic value is with the market price. So let's make it simple. Let's just make it simple. If Mama Bisi is selling rice, she buys one bag of rice, and she can sell one bag of rice. She buys one bag of rice for 50,000, and she sells all the rice for 60,000. If somebody comes to buy her shop, the person should not buy that. She should not sell that store for less than 60,000 naira. Why? Because that is the cost of her cost plus all her revenues is more than 60,000. So she should never sell her store for less than 60,000. It's almost the same as calculating the price of a share. In this case, we're just using one bag of rice, and we're saying you make 10,000. So the total you make from that bag of rice is 60,000. In stock price, it's more complicated. That bag of rice is not sold in 1 week. It's sold forever. The interest rate in the bag of rice is just 1 day. So we know that it's just from you buy rice on Monday, you sell rice on Tuesday. For stocks, you are going to use interest rates into the future. So it's very difficult to do. So you have to assume a model. You have to assume an interest rate, and you have to assume earnings into the future. If you get it wrong, then you have a wrong intrinsic value. Then when you make a purchase, you are buying over premium or discounted, so you don't make money. But if you're like Warren Buffett and you are able to look at the future of the company, the market share, and reach a number, then you make profit. So the answer is, if you go online, you tell you this high calculate intrinsic value. The problem is that you have to assume your interest rate and you have to assume your earnings growth. And that's where the problem is, because you can't see the future. That's where the problem is. So it's not like how, if you want to know the how, go online and put how do I calculate intrinsic value to give you a formula. But it will ask you for assumptions. And those assumptions are where you're going to miss it or get it. So hope that answers your question, Abuya. Let me see. Sorry, guys. I get lots of DMs, so I'm just making sure it's only for this example. And I think we're almost Olumide, since I have you here, right? Just preview. I don't think I've really got you on this. Olumide, if you had to invest $1 million, I'll put you on the spot here, Olumide. If you had to invest $1 million in Nigeria today, how would you do it? Where would you allocate it? Just put you on the spot.
Okay, very interesting. 1 million this year or last year? Or
this year. This year. How are you going to do 1 million this year? Yeah.
So, I listened to your outline, but I have some contrary perspective, particularly the stock market. So the stock market rally right now is spontaneous and very fast. In fact, the market is up by 6 trillion naira just this year, and we are just mid-month. Year to date is around 13.1%. And if you look at the fact that I'm looking at the face of the market cycle, the Nigerian stock market has a shorter market cycle than what we see in the United States. And the face of the market cycle right now is either we are in distribution or markdown. Now, we have 4 stages. We have the stage of accumulation, we have how these things move. So I think while there are still value in stocks, I'm a bit cautious. So what I'm doing right now is that my 1 million naira right now in dollar terms, black market is just about $750. So I want to get
how much?
The best bulk. I want to get the best bulk right now. So what I'll do right now is, you mentioned earlier 7 federal government savings bond. I'm going to put all my money into that first.
What?
Then I'm going to wait for So this is what while I'm doing that, that's short term. I'm waiting for the listing of Dangote and IHS or probably NNPC. So I'm waiting for those big listings. Then so I don't want to put my money in the bank because the returns are quite low, and I don't want to spend that fund with that amount of money. So once I get those listings out, I'll definitely transfer half to the broker and spread it to those assets. Then I think I would keep it at that because that investment is not suitable for risky assets like crypto assets, because I can really bond that the market can go high, but at the same time I can lose all my funds. So I think that's the conservative way of me looking at $1 million investment.
So if I understand you want to basically park the money in federal government savings bond for 11% for now, and then you're waiting for the equity listing of these legacy companies that are going to maybe buy for long term, more or less.
Exactly.
Interesting. Very interesting. You've broken it into timing. Very interesting. Okay, so are you sure they're going to list all these guys in Nigeria in the next 9 months? You're sure they're going to list? I know the discos.
It's not affirmative, but I think I'm leaning more on IHS and Dangote, maybe fourth quarter. But these things are still ongoing. NNPC, I'm not so sure at all because we don't even have their books. It doesn't look like their books are ready, and the direction at which the company is positioning themselves don't look like their market recipients. So, but we also expect other listings. Those are major companies, but the tech board has come to play, and we've seen some successful listing. Mercury Industry, pharmaceutical company, listed some months ago, and it did outstanding well. VFD Group also listed. So we're seeing IPOs. The market looks attractive right now. Pension funds are taking higher positions in the market. So it seems that investment bankers have been able to lure companies to list. So if we don't get those legacy industries, I'll pretty much look at some companies that have strong fundamentals and are quite young.
Okay, so IHS is the guys that do the telecom masts, right? That's the company that.
Yeah.
Okay,
yeah.
So you're buying telecom, you're buying, and then NNPC for now is out, but Dangote Refinery, you think Dangote will list?
Yeah, I think he should. Dangote has been known for being a true believer in the NGX. In fact, I looked at his wealth to the country's GDP. It's about 4%. I think he will want to de-risk. My only concern is that will he really maximize return? The fact that the market is small in terms of the Dangote Refinery. Dangote Refinery has at least an estimate of 20 billion valuation. And if you look at the Nigerian stock market itself and the trading volume, it's still quite so. I consider they might go Zeblat or Airtel Africa's route. Maybe they will do a dual listing in London and Nigeria, but definitely I'm very positive that Dangote will consider the NGX.
So Dangote Refinery, NGX in Nigeria, 9 months time, keep money for that. IHS is going to come as well, keep money for that. Those are some good companies, and if those listings happen, Nigerian NGX will just blow up in terms of capital and also in terms of dividend. That's going to be really, really fantastic for the government if that happens, and also for the investors. Right?
Very true. Yeah, very true. In fact, it's going to open more windows of opportunity. Just like what Saudi Aramco did in the Arabian Peninsula financial market. I foresee that also because Dangote alone will definitely be the biggest conglomerate already. Already, it's even the biggest conglomerate, but it will also solidify its position and definitely will attract. We're going to see institutional buying, I'm very sure pension funds will jump into that stock. I'm very sure that institutional investors also will. So definitely to put more eyes on the Nigerian market, and it will be a good PR for the NGX.
Okay, so I've taken that guidance as well. I'm going to wait for those companies as well. So let me get some Naira into Nigeria and just keep it there, waiting as well with you. Yeah, that's a good one. Stephen, go ahead, sir. Stephen Obi.
Thank you very much. Mr. Kalu, can you hear me well?
Yes.
Thank you very much. I'm one of your ardent followers. It's the first time we're speaking.
Thank you, sir.
I want to thank you for what you do. Your timeline is a blessing.
Amen.
Just curious here, background, I live in New York, invested here in the real estate in America, but I'm more interested in investing in Nigeria. And I've been trying to look at what sector. Agriculture seems to be the one that kind of appeals. But would you wear the cap of an advisor now, which I think you are, would you be putting your dollars into Nigeria agricultural sector? I have access to land in my village as much as I want, but I'm just considering the FX regime that is very unstable. Would you be allocating resources that are currently in dollars in real estate here in America to Nigeria? I'm from Edo State and I have access to quite a bit of land, but I'm thinking about that sector as an investment. Would you do that? Is it too much of a risk?
I mean, the whole word investing means you are taking risk, right? If it's not risk, it's just a hobby. So if I go online and I create a dummy investment account, I'm not really investing, just playing. That's a hobby, right? So if you are investing, you are taking risk because you'd like to get a predetermined return according to your risk profile. Last space we had a space on Sunday, built out yesterday. We literally talked about what you're asking me. We brought in a guy here that was doing investing in agriculture in Nigeria. He's an investment banker. He's investing in Nigeria in agriculture. He's doing palm, dwarf coconut, and all that. And he's he gave a lot of numbers, a lot of expertise, issues he has had, and all that. What I will do is maybe I can connect you with him and then you can speak to him, or you just download the app. If you go to the TL on you see the podcast link there and listen to it. His name is Dr. Obiere. He was here with us yesterday. That's the guy I would basically push you to ask that question to. In terms of dollar to Naira, I mean, what's the highest interest rate you can get in America if you invested in a fixed income? Maybe 5%, 4%. If you did stocks, if you just did dividend as the stocks as a whole, the whole market, S&P, you're doing 6 to 9%. As in, you're not buying individual, just buying the market itself. But if you did the same in Nigeria, clearly your returns are higher in Nigeria, but clearly your risks are also higher in Nigeria. I also don't see the Forex problem, because if you bring in dollars to Nigeria to invest in cash cropping, you are doing it with the intent to export those cash crops out to also earn dollars. Let me caveat seriously to you, sir. You can't do anything yourself in Nigeria if you don't have a Nigerian base or Nigerian partner. You're not going to leave New York to come to Nigeria. So your partner in Nigeria is the most important element in this entire thing. If you can get a good partner in Nigeria, you're on the pathway. If you can't get a good partner, simply buy the listed agricultural companies in Nigeria. Presco, Okumu, those guys are already listed in Nigeria. Boas Foods and all that. That gives you that exposure to Nigerian food, but you don't have to be here to manage anything. So you've got that option of doing your PE equity with individuals that you know, or going through my friend I came here yesterday, or just buying the stocks directly. I will definitely do it. I invest in Nigeria already because of the returns and because it's a battered market. So if it's a battered market, when the market turns around, you are already in. So Nigeria is a very, very bad story, but it's also a bad PR story. There are many good things happening in Nigeria that we can take advantage of, and there are also many bad things. See the kidnappings going on, that is reality. But still, it's a market that has latent, not real, latent ability to generate returns. So go on my TL, or I'll send you, if you send me a DM, I'll send you his DM and introduce you guys, and you guys can talk. Yeah, that helps. Excellent. Essay, please go ahead. What time do we have, guys? we're going to round up.
Good evening, Kalu. Good evening, everyone. Can you hear me?
Yes, Essay, very well. You're going to be almost the last guys. We're going to go. We'll spend about 3 hours. So Essay, go ahead. Go Essay, AR, Ekene. Then we'll give it a good. Yeah, go ahead.
So I was just going to make a mention of the fact that Olumide actually spoke on the question you asked him. He said he was going to divide it into just bonds, that's federal government bonds, and then also some few stocks. And then thank God Stephen actually came in. So I was just going to ask if you have some sort of random advice as to investment into animal husbandry and agriculture, basically.
Yeah.
Because I quite know that these things are actually they might really not be a quick. Yeah, Kali.
Yeah, just real quick, right? The space we had yesterday addressed your question. There was even a topic on pig farming, where the guy talked about pig farming to sell to the Chinese, even in Niger and Chad. So it addresses your question. I would say get that space, or look for the guy and send him a DM, or send me a DM. I'll connect you with him and you can speak to him. Okay. But it clearly addressed, he was specific on pig farming because of the huge demand in China. So that really answers your question. I'm rushing you because I want to get AR and Ekene in here. So Essay, do that, and then that should answer that question directly. Hey, AR, good day, sir.
Yeah, it does.
No worries, sir.
Yeah, Kalu, thank you for having me.
Can
you hear me?
Yes, I can.
Yes. My question is directly to Olumide. You asked him about how he's going to invest 1 million naira.
Yeah.
Now, I've always been skeptical about putting my money in naira because right now most of my funds are in foreign currency. And the question I want to ask Olumide is, how do you hedge against devaluation and inflation? Because by the time you invest 1 million naira in certain markets, and when you want to pull that money out, it's not the same value in terms of the inflation and the devaluation of the currency, because dollar mostly, dictates the consumable goods in this country. So I think that's the question I want to ask Olumide.
Yeah, very interesting. Okay, I'll give you personal examples. So I earn in FX and I also have Naira exposure, but I try to be very smart. So I simply look at the value, the fair value, and how do I get the fair value? Do the normal analysis. So let me give you a short example. When the Naira was trading at black market, was trading at 800 around November 2022. I was aggressive on energy stocks because I knew there was going to be reforms, either if Atiku or Tinubu. So I spent so much on Nigerian stocks, and the average gain I had was about 400% on each of those stocks. So I applaud the person that bought at the black market. But this is not saying that you just have to be smart about it. So for example, now it's trading at 1.2. How bad can it get? We don't know. So that's why I mentioned earlier that I always look for highly undervalued assets. So the drawdowns, and when I consider the devaluation risk, won't burn me. Nigerian stocks right now are rallying. Look at Cadbury, for example. I looked at
Cadbury.
I looked at Cadbury December, and I saw that this stock, despite Morgan Stanley did a review of consumer goods, and I looked at consumer goods, I looked at Nestle, I looked at Cadbury, and I said, well, I think banks are okay, let me rotate my assets. And I just popped into those stocks. Cadbury did 50% in the past 1 week. You understand? So you can always maximize that Naira advantage. And I still tell people before I drop the mic that, see, having a Nigerian passport also has advantage. If you're an American citizen, any place you have your earnings, you are taxed. In Nigeria, we don't have that kind of law yet. So I maximize that utility. I usually still allocate my money into Naira investment. So it's not that when I do the average in the longer run, I'm immune. This week, this month alone, investors made $6 billion investing in the Nigerian stock market. You just have to be smart about what assets they're under, like Kalu mentioned, gauging whether an asset is undervalued or overvalued, and looking at the periodicity and just thinking. So right now, I sold some of those stocks and I bought foreign currency back. So you could see that I've edged against and I've taken some profits.
Yeah, and again, it just let me just shut down the recording on the podcast, guys. Thanks. Don't leave. Thanks guys for just following us on the 3-hour special investment series. You guys enjoy the rest of your evening, and I'll see you guys